Hello. Check. Oh, bus. Oh, Panchat. Ladies and gentlemen, boys and girls, welcome back. Very good morning. I hope I am clearly visible, audible. Let us go ahead. Fantastic. We are doing a chapter called Capital Gain. Fourth head of income in income tax law, charging section 45. We are done with one, the meaning of capital asset, the inclusions, exclusions, the types of capital asset which result in two types of gains and the benefit of long-term capital gains. All the major amendments also. Then we went to taxable transfer and we have completed the inclusions as well as exclusions in the definition of taxable transfer as well. Now what? Ladies and gentlemen, computation. In the computation, we are ready with the format, the pro forma. We have to complete this pro forma. The first thing that we have to learn in the definition of computation, in the computation of capital gain, gross sale consideration. Gross sale consideration, that is GSC. Gross sale consideration, GSC. You have to see basic formula of childhood format of profit is sale minus cost. Just that they have used some complicated terms here like gross sale consideration, some transfer expense giving you net consideration. Instead of cost price, they call it cost of acquisition. We have, of course, studied the concept of indexation also. So we know what is CAUA and how it is different from ICAI. But of course, we haven't studied anything about CAUI. See, bro, I told you this very clearly. Even CAUA has CAUI, bro. You CA students forever single. Even CAUA has CAUI. Shame on you. Shame on you. No? You leave, bro. Otherwise, you'll do weird stuff. Leave it. So, ladies and gentlemen, we have to understand what is GSC. What are we going to do? First, we will write the meaning of GSC. What do you mean by sale consideration of your capital asset? When we are writing this meaning, we are doing a favor on our notebook because this requires no explanation. What will happen is, sometimes it is not going to be easily available, and thus we will have a subheading called special cases of gross sale consideration. Those cases, those situations where GSC is not going to be easily available. So, as you are aware, capital gain is a chapter of exceptions. Normal rule, exception. Normal rule, exception. For example, everything is capital asset, but the exclusion. In the exclusion, we have personal movable, but that also has exception. Then we have exception to the rule of 36 months. Then we have exception to the rule of indexation. Then we have exception that instead of 20%, we had 10% without indexation. Of course, a lot of things have changed now. But do you realize everywhere there are exceptions? And therefore, there is a normal meaning, but there are some exceptions, some exceptional circumstances where you will not get your sale consideration easily. But before going to the special case, by the way, exam question will be on special cases. But we still will do the favor. As I said, we are doing a favor on our notebook by writing this, and this opportunity I would like to give to you. You have to do this favor. Think about it. We are talking about the term called selling price. I know as students you must have spent a lot of money on your education, etc. You have purchased a lot of things. Till now you are not in business profession, you are not selling anything as yet, but the one from whom you are buying is selling you something. What do you mean by selling price of anything? Of course, here we are interested in capital asset. But in general, what is selling price is what we have to write here. What is selling price of anything? What do you mean by selling price? What kind of a stupid question I am asking? What are you thinking? Speak whatever comes to your mind about this. Speak whatever comes to your mind, and that's right. Bolo. Cost plus profit. Anything else? Whatever we pay is not selling price. Whatever we pay for the for the seller you have to say. No, how can you talk about the buyer? Capital gain is for buyer or seller. So talk about it from the seller's perspective. Yes, please. You just have to change the word pay to pay to receive. Don't have to say pay. We are not talking about the buyer. We are talking about the seller, and that means yes, content. The amount received is what the amount received from the buyer. The amount received from the buyer is selling price. Of course, this applies in all the cases, but we are not interested in your trading goods. We are interested in capital asset. That means, can I say the amount received in lieu of English, in lieu of transfer of your capital asset, can we safely conclude it is GSC? And when I write this statement, do you realize why I make that statement? We are doing favor on our notebook. The amount received in lieu of transfer of capital asset is going to be gross sale consideration. Correct hai? Everyone? Very easy. But the problem is sometimes this amount won't be easily available because sometimes against your capital asset you will not be receiving money. You will give your capital asset, you will get consideration in kind. But is that also a taxable transfer? Yes. Yes. So what will be selling price in that? All those cases will come. Whenever I sell my asset and I get money, that means transfer ka definition ka first point was sale. And sale means getting money. That is very easy to come. But when it is anything other than money, the computation is going to be difficult. So how are we going to do? All that will be covered in our special cases. Normal meaning is very easy to understand. Amount received. But one line that I have to add here. The assessing officer. You know him, no? We have spoken about him, no? The officer in the income tax department who is going to handle your case and decide your tax. That means do your assessment. The assessing officer has no power to question the adequacy of GSC. The assessing officer has no power to question the adequacy of GSC. Supposingly, I have sold my residential house. Is that a capital asset? A personal immovable. Is that a capital asset? Yes. Against that, you have paid me a certain amount. The question is, can the assessing officer question that amount? Why have you sold it at a lower price? The line that is written here is saying, no. Supposingly, I have jewelry. The market price of the jewelry is 6 lakh rupees. I give the jewelry to you at 5 lakh rupees. So, what is my sale consideration? 5 lakh rupees. If I would have sold at market price, I would have got 6 lakh. That means I have sold my jewelry at a price lower than market price. Now, assessing officer is coming and asking me, why have you sold it at a lower price? You mind your own business. My jewelry, my money, my wish, my life, my rules. You definitely investigate. Is it that I have taken 5 lakh in check, 1 lakh in cash, and I am under declaring my selling price? Then you tax me on 6 lakh, bloody hell, levy interest and penalty also for under declaration of income. But if I have sold my jewelry at 5 lakh, you mind your own business. You can't tell me at what price to sell my asset. The assessing officer has no power to question the adequacy. If you have sold it at 5 lakh, your selling price is 5 lakh. Even if it is lower than the market price. Understood? So he cannot question the amount. Except capital gain. Everywhere you will find this. Except 2 sections. In income tax law, there is a section 50C and there is a section 50CA. Two places the assessing officer has right to question, 50C and 50CA. Obviously, you don't know about 50C and 50CA. 50C and 50CA will come here. There are about 10-11 points. Out of that, they will be covered. Trust issues, anyone? No? If I am saying I will be covering, I will be covering. In fact, in today's lecture, mostly before the break itself. There may not be break also. Early morning, everyone is fresh. Now you just wait and watch. You understood? So, of course, there is one thing that you know about 50C and 50CA. And what is that one thing that you know about it? That the AO can question the amount. So, normally the AO cannot question the amount, but in these two cases, he can question the amount. Is that understood? Everyone? Ladies and gentlemen, what is GSC? Amount received. Whatever is received is the answer. AO cannot question, but two cases he can. question. The two cases are 50C and 50CA, which will be covered in the special cases. Now we have to go and learn the special cases. So what are special cases? Special cases means those cases where the amount will not be easily identifiable. You will have to put a little effort in deciding what that amount is. To start with, an easy case, as I said, there are total 10, 11 situations. First, a case of barter or exchange. My first question to you is this a taxable transfer? Now, the problem is that here against my jewelry, I am not getting 5 lakh or 6 lakh rupees. I am giving you my jewelry. And against that jewelry, you are giving me, say, 2000 bottles. Is that still a taxable transfer? Now, if there was money involved, that money would have directly become my answer. But I don't have money involved here. So what will be my sale consideration? Because I have to pay tax. Why I have to pay tax? It is a taxable transfer. But on what amount? Because I cannot pay tax on bottles. Okay, I have received 2000 bottles. Out of that 600 bottles I will give to the income tax people. You can't pay tax in bottle terms. You have to pay tax in rupee terms. So you will have to decide, and that is why we say that this is a special case, because the monetary amount is not easily available. And all these cases are such cases where the monetary amount will not be easily available. Understood? We don't have any amount in rupees. What will we have to do? Fair market value. Fair market value. Value of the jewelry will become selling price. Say yes or say no. Amount we don't have. So we have to take fair market value. That much everyone understands. And now my question is, we will take fair market value of the jewelry. Say yes or say no. No. So what? Why? Why bottles? Why not jewelry? Why? Because selling price is not what we give. Selling price is what we get. This is capital gain. You have to use your common sense. I did not give you the answer. Answer is fair market value of the asset received. What am I giving? Jewelry. That can't be selling price. Selling price is what I am getting, what I am receiving. Selling price is not what you give. Selling price is what you get. If I give you this pen and in return I take 100 rupees from you, I am not giving it. This pen is worth 10,000 rupees, and what will you do with this pen? You can write in your notebook. But I am not interested in the value of the pen to take as selling price. Selling price is going to be not the value of the pen, but that 100 rupees that you are giving me. Fair market value of what you have received will be GSC. And that's how I say capital gain is very, very easy. Every time I leave the opportunity for you, you are going to give the correct answer. This is given in section 45, subsection 1 only. Section 45 is the charging section. This is given in the charging section. In case of barter or exchange, fair market value of the asset received. So normally what is sale consideration? Now the full picture will become clear. Normally what is sale consideration? Amount received. If the amount is available in rupees. You cannot question that amount. Two cases he can question, we will see that. Otherwise normally he cannot. But then sometimes the amount received won't be easily available. So we have to put effort. And we are doing those cases. First case is barter or exchange, where we have received a non-monetary consideration. Then the sale consideration is going to be fair market value of the asset received. Is that understood? Second. Second case of special cases of GSC. Is that clear? Now, most of these cases we have already discussed. You just don't know the section number, but you know the answer. If my asset is destroyed, what is my sale consideration? Because I am not selling it for money. But relinquishment, extinguishment is also a taxable transfer. What is sale consideration? Insurance claim will be my sale consideration. And here I had used a very, very offensive word for the government, which I don't want to repeat in class. Now, to which your reaction was, sir, ये क्या sir? ये तो नेम ही बोलता sir. I speak this word. नहीं. Why did I call the government that? Because this transaction is taxable transfer only if the claim is received. If it is not received, it is excluded from the definition of taxable transfer. Correct? Eh? Fantastic. Next. Third. As I said, most of the things you are aware of, just section number you don't know. Section 45, subsection 2. Conversion of capital asset into stock in trade. किसका? अच्छा, वो तो अर्ली मॉर्निंग लेक्चर में इट हैपेंस. Take your age on a calculator, multiply it by 2 and you'll get my age. मेरे को भी होता था जब सुबह का लेक्चर अटेंड करना होता था. Believe me. And I'll tell you what a big coincidence. Okay. CA Inter ka classes, no, as per concept, we had all enrolled, all my group of friends. We had taken one coaching class where all subjects ka money we had paid. But somehow we did not like two subjects over there. Audit law, we were not comfortable because we joined considering that a group of teacher is teaching. But that audit law ka teacher had left, which we came to know only after the batch started. Even then, accounts was good, tax was good. My Inter ka tax teacher still remains my favorite tax teacher. But audit law, we had joined a separate coaching class only for that teacher who had left. Coincidentally, because our Inter lectures used to be evening lectures, audit law used to be morning lecture twice a week. Because she had to keep it not coinciding with our evening timetable, otherwise nobody would have joined her class. Coincidentally, that audit law lecture used to be in this building, on this floor, the first classroom on this floor. The first classroom on this floor, where the staircase gets over, and the first room on the left used to be my audit law classroom. And I was not used to morning lectures. So every audit law lecture, when I had to get up early morning, especially when we had the habit of sleeping late, every morning I used to come as a vomit wala feeling. I am talking about myself. I am not, saying that you are putting false statements in front of me here. Okay, so it is normal. Settle down in the class and focus. We have already studied this concept. Yeah, this also makes us clear about one more thing, that by chance, career is very, very important. By chance, if we don't like one subject or the other, we should not be hesitating and enrolling for another subject. In fact, our days, so only face-to-face lectures were available. So we had to adjust our timing and attend. In case any of your friends in the neighboring building is uncomfortable with the tax coaching over there, so these lectures itself are available for purchase in the recorded form. Just you can share this information with them. Sir, what will I get? They will give you good wishes. Ultimately, human life improves when people wish good for you. So those good wishes you will get, I will also give. But you can recommend that buy these lectures. 194H. So first you sell, then we will talk about it. Do one transaction on trust basis. Okay? Find out what is the selling price. Shall I give you this open offer? Only for you, Akash, or anybody else. Only for you people. Open offer. My selling price of one set of video lecture is 6,000 rupees for CA Inter Direct Tax. Sell this. That will cover hard copy of books, which I will give from my pocket. That will cover your recording, etc. 1.5 views, 6 months validity. And I will be giving doubt solving on WhatsApp only to those who purchase video lectures. You take the fees from the student and give me whatever you want. Maximum first transaction you may not give a single rupee. No, because believe me, book ka cost only is 2,000 rupees, because you know the size of the books, and books will be delivered. So delivery cost also I will pay. GST also I will pay because 6,000 is all inclusive. So believe me, this is not greed. This is service to CA inter students so that their base is strong enough that they don't face difficulties in final, which earlier thousands of students have faced. Still, despite having out-of-pocket expense, open offer. You keep the full amount. Give me whatever you want. I must admit that I have out-of-pocket expense of at least 2,500 to 3,000. But I leave the choice to you. Second transaction में तो I will tell you, so you will have to give. ना ऐसा नहीं sir, for all the sales you are giving the offer. तो from today only we start selling. नहीं ना. Second transaction में तो you will have sensibility ना. चल first transaction में आएगी. अभी करके देखो. Now do. हाँ. And so strong recommendation to those students. Don't think that अरे नहीं यार, now I have paid fees. My fee is in any case very nominal. Believe me. You have to believe this because I already told you the amount. And secondly, for education, no, you should not be thinking so much. That is again human tendency. Education, this is not an expenditure. This is an investment. And the day you understand this, no, things will be much better. This answer you are already aware of. What is the answer to this? I am not selling. What is the answer? If you don't know this, to Pokal Bamboo. What is the answer? Which fair market value? At the time of. Other things we already know. That conversion is taxable transfer, but will be taxable in the year of sale of stock. Indexation will stop in the year of conversion. Holding period will stop in the year of conversion. Full transaction start to finish we have seen. Currently, our target is only to determine GSC in all the special transactions. Some of those transactions we have already completed also. But we are only summarizing everything at one place. Ye correct hai? Next, 4. Section 45, subsection 3 and 5. Section 45, subsection 4. Along with them, there is also one section, section 9B. Special sections for partnership firms covered in the chapter assessment of partnership firms at CA final. Not applicable at inter. The line that I have written in blue color, except Preeti, everyone else can write that, please. She has clearly told me, okay, sir, don't be in overconfidence. But except her, everyone else has shown me the confidence. So everyone else may kindly write it. Why, sir? 45 subsection 3, 45 subsection 4 and 9B are special sections applicable to partnership firms, not a part of CA intermediate syllabus. And we go ahead. And I hope you are not foolish, okay, sir, after 4 you have written 6 or 5, either 5. Then there are some people who point out these mistakes. Now you started learning audit, no? So habit to find out mistakes. Section 45.5. Again, you know the whole concept. Yes, please. What is sale consideration in cases of compulsory acquisition? Because you are not voluntarily selling. Kya? The compensation. And sometimes there can also be something called enhanced compensation. Compensation or enhanced compensation. Compulsory acquisition. Other things like compensation in the year of first installment, enhanced compensation in the year of final order. Compulsory acquisition is taxable transfer, but will be taxable only when we get any rupee of our compensation. Indexation will stop, holding period will stop. Enhanced compensation in the year of final order, cost of acquisition will be zero, only litigation expense will be, everything will be done with summary also. Okay, so here we are only summarizing what is going to be the gross sale consideration in all those special transactions. Is that clear? Sure. Next, section 45, subsection 5A. Section 45, subsection 5A. This is one transaction that we have not discussed before. This is really close to Pratik's heart. I'll explain how. We are discussing the concept of Jada, joint development agreement. See, compulsory acquisition, conversion, you are aware of the concept. I had to only tell you selling price. Now, in this case, I have to first explain to you what this means. Correct? So, Pratik, when you develop your joint, you roll it, then you fill what is that grass called? Weed. You fill that, correct? And then you sell it where? In class. वो होता ना, you roll and then you call it joint only, and he is doing joint development, and you all are having agreement with him. Is not this joint development agreement? Let's get this clear. This transaction basically is redevelopment of properties. This is something that is happening in every corner of the country. Big cities, small cities, old buildings are being demolished, and in their place, new buildings are being constructed. The typical system is people living in that old building will hand over their building to a developer. Developer will demolish the old building, construct a new building. In that new building, the old building, the people will be getting houses of bigger sizes. Plus, developer will be allowed to construct extra, we call it FSI. He will be getting permission to construct a bigger area, and that extra area he can sell to outsiders. If you observe the transaction from the developer point of view, this is strictly PGDB, trying to convince you that please give me your building, giving you bank guarantee, etc., so that you also feel safe that bank is taking the responsibility in case the developer defaults. So he has to give bank guarantee commission. That is also his business expense. The whole demolition cost, construction cost, business expense. One day when the new building will be ready, except the flats given to the old building owners, the additional flats can be sold to outsiders. That selling price will become sales in business, and basically it is PGDB. But you have to now think about the point of view of the building owner. You have to keep in your mind the owners of the old building. You understand what is redevelopment? You understand old building getting demolished and in that place developer is constructing new building? Understand with the help of the old building owner. See, what is your advantage? One, your old building is not in a good condition. So you are getting a new construction. Two, they will increase the size of your house and give. General system, Mumbai, I'll tell you, anywhere between 20 to 40% size is increased by the developers. Three, if your house is crossing a certain area after that increase, you will get parking which you otherwise don't have. The new building will have better facilities and amenities compared to the old building. That's your benefit. There is one more way in which land redevelopment can take place. Joint development can take place. Supposingly you are owner of a piece of land, there is no building. The land was purchased by your ancestors, 100 years ago, 200 years ago, an inheritance you have got it. At that time, the value was very small. Now this land is maybe say 200 crore rupees. That way you are wealthy because you have a very, very big asset, but you can't do anything. Think about it. Somebody who has to buy this land should have cash flow of 200. Despite having such an expensive asset, unfortunately, it is not converting into cash or liquidity for you. Your developer will give you an option. Give me your land. What will I do? I will construct building. Believe me, the building in which I live, it was a land owned by a particular person. He wanted to sell it. Prime area of South Mumbai, he wanted to sell it, but nobody has so much money. A developer, so-called India's number one developer, bro, there is leakage in every flat. Only he calls himself India's number one developer. Loda. But then I'll tell you what, there is leakage in every flat. And he is also India's richest politician. He constructed two buildings on this land. That means the landowner ka land is gone. The land is given to the developer. Developer has constructed these two buildings. Of course, now both buildings are 65 floors. So each building has some 220 houses. Roughly there are 450 families, bigger than a village living in the, my village probably has these many houses. But 450 families living in the society. Builder constructed these houses, and this, out of these 450, some 50 flats were given to the landowner. The approximate price of one flat is between 5 to 6 crores. So roughly you can say the builder has got flat worth 250 crore. Builder bol raha hu, my bad, sorry. The old landowner has got flats worth 250. Of course, out of 450, only 50 are given free. The developer has made money by selling 400 houses. But he gave 50 houses free. Free in the sense that guy gave his land. Then only you constructed the building. No. Now what is the benefit of the landowner? 200 crore ka land no one can buy. But one by one these flats can be sold. And believe me, out of 50, he has already sold 40 plus houses. And whenever somebody, supposedly somebody living in rent in one of these houses, wants to buy, everyone knows that this guy has too many houses. If I go and buy from anybody else, he will not reduce selling price. But this guy has too much of supply. So if I go and bargain with him, actually he has received, the understand diminishing marginal utility. He received so much money by selling one after the other on the flats that the last few flats, you offer any price and he was ready to sell. The deals have taken place at really, really low price because he was already flooded with funds and wanted to get rid of the houses. But once his stock got over, property value increased because other people are not selling. In fact, people bargained with him, purchased at a lower price, and once his stock was over, people inflated their prices and made profits in that also. If this building was not constructed, despite being owner of such a big land parcel, I cannot do anything. I don't have 100 rupees also revenue. See, even if there is a house, I can at least get rent. An open land which is of no use. This was not fit for agriculture or anything. So that way, an open land of no use is not going to generate rent for me. If there is something productive that I can do on the land, then there will be rent also of the land. Otherwise, there has to be building. You understand redevelopment is beneficial for all the parties. And we have to now examine this transaction from the perspective of the old asset owner. Now, I have given you two examples. One, old building changed to new building. Still, you are getting new house against your old house, or open land converted into building. Still, you are getting houses against your land. Correct? Eh? The question was basically this. You are having an old property. This property has now gone in redevelopment. That means, can I say you are going to hand over your property to the developer? The developer is going to take some years for construction. And finally, after some years, developers promise 3 years, but they will take 6 years to be mentally ready. That also, if it is a financially well-to-do developer, then 6 years. Otherwise, 6 can be 10 also and 10 can be 20 also. There is no record that you can keep with respect to that, to be very honest. And now you say, sir, what about RERA? See, don't be students of University of WhatsApp, please. RERA cannot come to the rescue of redevelopment projects. RERA is applicable only to new projects. So there is a new project going on, you book a flat in that. The developer, there also they try to cheat. This is, sir, we'll give you possession by 2026. Now you are thinking, you got 25 already, so 26 next year. Bro, then they will say when 26 will come, no sir, we said 26, sir, it will take December. You are thinking next year, but 26 December, sir. Forget that. The date that they promise in the brochure. And then if you ask them, what is your RERA date? RERA date will be 28. Legally, they will be under trouble only if they miss that date. So you be mentally ready that you will get only in those cases. And redevelopment or RERA also not applicable. So typically, builder will promise 3 years, but at least you can assume good builder 6 years. Still, good builder will also take. Can I say after that period you will get your new property? And do you also know that in the in-between period, the developers actually give rent to the landowner or the old building owner? Are you aware of this? You vacate your old building, so temporarily you will have to shift to any other location, no? Till the time this is not ready. You can't be sleeping on the under construction land. Day may you do construction, night may we will come and sleep, all the old families. Hello? Nahin, na? So you'll have to temporarily locate to somewhere else. Builder gives shifting charges. Then after the new building is ready, you will come back. Builder gives reshifting charges. But these are one time. One time for going, one time for coming back. Builder also gives some rent for staying in this place. Matlab, builder is giving you two types of consideration. Consideration one, he is giving you this new property against your old property. And consideration two, during the in-between period, you can call it disturbance charges or relocation charges, he is giving you some monetary compensation also. This is joint development. See, builder is investing money and you are investing risk. Giving your property to the builder is very easy. Reclaiming it from the developer is really, really difficult. They are shameless crocodiles. You can't do anything to them. You can't do. You fight a case against them. You protest against them. You do whatever. You are always at risk once you hand over your property. So basically, can I say both are investing something? One is investing money, other is investing risk, and accordingly we call it joint development agreement. Is this happening in every street of the country almost? Everywhere old buildings are getting demolished and new buildings are being constructed almost everywhere. But believe me, there was no tax treatment of this transaction till 2017. Surprisingly, before 2017, there was no such tax treatment. This subsection 5A was added in budget of 2017. And redevelopment is happening since 20-30 years. And before this point came, all chartered accountants used to give different opinions to their clients. Supposingly, I am the client. My property has gone under redevelopment. That means I have given my old asset to the builder. Builder is giving me money right now. And one day when the new building is ready, he will give me my new property. What is tax treatment? Some CAs used to tell their clients, this is exempt. Because your property is going, your property is coming. Why tax treatment? No tax treatment. Some builders said, this is income from house property because you are getting rent. House against house, nothing. But the money that you are getting is income from house property. Then another builder rectified this. And another CA rectified this. The CA is saying, sir, house property can arise only if there is building. Here there may not be building or the building is demolished. So it can't be house property. It will be other sources. So the opinions given by CAs were exempt income, house property, other sources. You understood? Obviously, they couldn't have said salary. You can't trust them. They could have said salary. But obviously, salary was not the answer. Exempt house property, other sources were different opinions of C. When the law is not clear about something, remember, when the law is not clear, then everyone is right. Supposedly, my morning lecture, 7:45. Okay? So by what time you are allowed to come to class? By what time you can come to class? 7. Huh? क्या बोला? 7:30. The law is very clear. Supposingly, I don't make clear law, then anybody coming at 8 is also fine, and 8:10 is also fine, and 9 also is fine. The law has to be clear, otherwise everyone is right. Supposingly, you are not wearing helmet for your safety. Is there a law that you will be penalized? But if that provision was not there, then the one wearing or the one not wearing, everyone is right. Correct or no? Correct or no? So every CA was giving a different opinion and everyone was correct. Finally, government said, bro, listen, exempt income, house property, IFOS, capital gain. This is capital gain. This is going to be assumed as a transaction where you have sold your old property to the developer. And as a consideration, you are getting two things. One, you are getting some monetary compensation. And two, you will be getting the new property the day it is ready. And these two together are acting as selling price of your old asset. What is the heading under which we have studied joint development agreement? Please understand. Capital gain is sale minus cost. This old property was acquired by me once upon a time. I am aware of the cost of acquisition. If I would have sold this property to someone at a monetary consideration, I would have taken that as the same consideration. But I am not selling this property to anyone at monetary consideration. I am handing over my old property to a developer, and against that, the developer is giving me two things: money for shifting, rent, whatever reason, and two, new property. This is capital gain ka selling price. Because the selling price is complicated in the whole transaction, I have chosen to explain the meaning of joint development under sale consideration. You understood? That means what is this transaction? This is basically going to be considered as capital gain on transfer of your old property, where we have to take sale consideration minus, sir, Kawa or I Kawa, what can be the case? Till 22 July, so it can be I Kawa. From 23rd July, it will be Kawa, but for tax calculation purposes, there may be I Kawa. See, whether Kawa or I Kawa, that I am aware of, no. So, whatever was my actual cost, this is immovable property. Whatever was my actual cost, will I take that? Will give me my capital gain? Ladies and gentlemen, the question is, what am I going to write here? Special cases of GSC. Cost price is not special, that is normal. What will be GSC? If you have really understood the explanation of joint development agreement, within the explanation already I have given you the answer. Huh? The monetary consideration receipt. See, don't say rent, because he can give you rent or shifting charges. He can give you anything. You know what? Developers give you 1 month brokerage also, because they know that wherever you shift, you have to pay rent and brokerage. So, monetary consideration. Is that it? No. Plus the new property ka value. You understand? That is the answer. The amount in money, wait, please. The amount in money plus you are saying the value of the new property. Just that whenever it comes to immovable properties, income tax law does not use the term FMV for immovable properties. Income tax law uses the term called stamp duty value, SDV, of the property, of course, received. Now, sir, what is the stamp duty value? Later in the chapter, this is going to come in detail. Just to give you a brief idea, that whenever you buy a property, you will be paying massive money for purchase. Will you want to register the property in your name? Every time you register any property in your name, the municipal corporation, the local authority will take from you a tax called stamp duty. It is different in different states. Maharashtra levies 6%, which is massive. Think about it. You know, if the stamp duty value of your property is 3 crore rupees, so you have to pay stamp duty of 18 lakhs. And by the way, that 3 crore rupees also you are paying from your already taxed income. That way, the taxation on properties in the recent times has been increased so massively by the government that the cities have become expensive, and this is what is contributing to inflation in our cities. Think about it. Think about it. You need someone to work for you as a driver or as a house help. Once upon a time, property ka stamp duty value was too less. So the owner was paying very little stamp duty on the property ka acquisition and rentals. So he was giving the property to the working class at a very, very low rent. And because the household expenditure of that person decreased, he was willing to work for you at a salary of 10, 15, 12,000, 20,000 highest. 20,000 used to be considered very, very high. But the problem is, now their landlords have made the rent only 10, 12, 15,000. And that's the biggest expense. See, understand, they don't spend too much on food or etc. or their food, or mostly to the place they work, only that place only it gets managed. They have little expenditure for their children education, some expenditure for safety, medical, etc. But the major cost of their household is the rent that they are paying. Because that rent has increased, now the driver cannot work for under 30,000 because 50% of that is going away in the form of rent. That also, if he does not have family here. If he brings the family here, then he will need full house for himself. But landlord has to increase rent because of higher stamp duty. Driver ka rent will increase, so you will have to pay him extra salary. And if you don't pay that, he won't work. Without that driver, you will not be able to survive. And this is where the problem lies, ladies and gentlemen. That which is why day-to-day expense of all businesses, all professions who are hiring that staff increases. There was a time when somebody who will come and clean your premises was willing to work at 4-5,000 also. Today, if you want a full-time help only for doing cleaning work also, you can't hire at 15,000, below 15,000. Except see article who will get 5, 6,000, 7,000. But then you please understand, you are not working as an employee or a helper. You are undergoing training. And when you join a coaching class, you have to pay fees. You are lucky that your articleship is actually paying you. Just imagine if institute says learning under a CA compulsory and pay that CA for teaching you. Just imagine that CA is teaching you work, paying you and creating competition, because most articles, once they become popular with the clients, they take away some of the clients and leave them. And it is a acceptable trend because the boss under whom you are working also has some clients of his boss. You just have to give a written notice that kindly give your no objection, and in 15 days, if that old guy does not reply, audit may you be taught all this. If that guy does not reply, so you can carry on with the audit of the job. So he is paying you. Believe me, I know of a doctor who is practicing homeopathy. He has got at least 10-15 assistants working under him in his clinic. So I thought that the doctor must be having massive income because 15 assistants he is paying. Then one of the assistants told me that, sir, we are under training, we have to pay him coaching charges. He makes us do work also and we have to pay him also. You just feel that you are irritated because of the amount of work they make you do in a CA firm. But bro, they are still paying you. You are sitting in a coaching class right now, you have to pay for attending this class. Do you understand the difference? Okay, so let's be fair with our members also. Day by day, things are becoming expensive. Staff is becoming expensive, and Maharashtra is continuously increasing. Even now, they have proposal. March, maybe we will come to know. They have proposal to again revise the stamp duty value. So, what is stamp duty value? The municipal corporation basically is going to value every property in its area. That this is the market price of your property. Do you remember we have studied a chapter called income from house many years ago? By the way, I'll tell you one fun fact that between today and income from house property, we have studied only 2 chapters. House property was only 2 chapters ago. That is salary and. So it seems like we have studied in some previous birth. No house. When was the last time we studied house property? Chiruput Kumar. Yeah, then. Which brings me to one more question. I believe you all are solving PGDB ka additional question back now. You are? Fantastic. So, ladies and gentlemen, house property के chapter में we were taught that whatever is your actual rental value, local authority will find out the rental value. We call it municipal valuation. Likewise, local authority will also find out the sale value of your property, and on that value they will levy the tax called stamp duty. So, you want to register a property in your name, so you have to pay tax on that value. Name of the tax is stamp duty, and the value is called stamp duty value. Stamp duty value is market price of your property as per municipal corporation, just like municipal valuation was market rent of your property as per local authority. This is market price of your property. This property, you all said no sir, take FMV. But income tax law does not take FMV, it takes local authorities value. We assume that only to the fair market value. That is not fair market value. Fair market value may be higher or lower, but local authority considers it this way. Income tax is borrowing the value from local authority. Ladies and gentlemen, what will be taken as sale consideration? The monetary compensation plus the stamp duty value. 2 things will be taken as your sale consideration. Everyone is clear on this? You are clear of what is the meaning of joint development agreement? Give old property, get some monetary compensation, one day get new property. That total amount that you are getting, monetary plus value of the new property, stamp duty value, will be considered as sale consideration. In which year? In the year of getting completion certificate. Please understand, taxable transfer is not when you give this property. Taxable transfer will arise when this property receives CC. We have discussed the meaning of CC in house property. When the property receives completion certificate. But you can't stay. For staying, you need OC. But when is the new property assumed to be considered to be ready? When the property gets CC. Everyone is clear? So, you have to pay tax on stamp duty value plus monetary compensation minus your cost of acquisition on the year of, in the year of receiving completion certificate. Means, when you give your property, you don't have to pay tax. Please understand the chronology here. Then developer will start giving you money, no, for rent. You don't have to pay tax. Don't have to pay tax. One day when the new property receives CC, that day you will have to pay tax on all the compensation that you have received over the years plus the value of the new property. Did you understand this? But a couple of clarifications. One, if the property is sold before CC, then in that case 45(5)(a) will not be applicable. We will apply normal provisions of capital gains. Explain karta hu. Please understand. Let me explain. Okay. Everyone is clear about meaning of joint development agreement. Everyone is clear about what will we take as selling price. Not just the answer here, but the logic of that answer also. Everyone is clear. Now please understand. Sometimes what happens? I hand over my old property to the developer. So I have relocated somewhere. I stay over there. I somehow develop a comfort over there. In terms of my travel to office, in terms of the, I have developed good relations with the neighbors over there. I am comfortable over there. Yes, my building is still under reconstruction. So finally, when that building will be ready, I will have to go back. But now I don't want to go back. Can it be possible? In fact, it happens a lot of times that you are comfortable at your new place. Some of us approach the developer and say, sir, you are going to give this new property to me very soon once it is ready. I don't want it, sir. Keep it. And the benefit of you keeping it is, if you have to give it to me, you have to give it free. But now if I surrender that property to you, so you can sell it to whomsoever at that time's market price, which is certainly higher than today's value. Pay me this bare minimum amount and I will exit the property. I am waiving my right in the property in the favor of the developer. Some developers, especially those who have good monetary power, who have cash flow, will be happy to buy that property. He will pay you 1 crore and take away your property. When the property will actually be ready, at that time you can sell it for 3-4 crores. If you have money, if the developer has money, he will accept your offer. He will bargain for sure. But there are some people who exit their redevelopment project before the project is completed. So have I waited for CC? No. If CC has not come, then 45(5)(a) cannot come. The money that I have received is my sale consideration and actual cost of acquisition. That means I am going to apply normal capital gain. Joint development agreement only is not applicable. Joint development agreement will not get triggered when you give your property. Joint development agreement will get triggered only when CC is received, and if the property is transferred before CC is received, so this section is not applicable. Normal capital. Is that clear? And last part of this explanation. Is it possible that the new property that I have received is sold in future? Is it possible? This property I had received against my old property. Correct? Eh? Some years later, it is possible that I am selling that. See, once I wait for CC, so this calculation is compulsory. Once CC takes place, I have to pay tax on this. Now I am eligible to get my new property, but 5 years later, 10 years later, I can sell that new property. Bolo, yes or no? Will there be capital gain now? Again, on the sale of new property. This time, the sale consideration is easy. Think about it. Because sale consideration here cannot be complicated. I have sold my new property in the open market. The question is, what will you take as cost of acquisition? That is the question. Remember, let me explain the question. Normally, if I acquire a property and I sell it, my purchase price is my cost of acquisition. This new property I had not paid and purchased. This new property is a property that I had received in course of redevelopment. What will be the cost of acquisition? Because only when I know cost, I will be able to write the sale consider. I will be able to write the capital gain of the future sale of new property. What will be the cost of acquisition? Come on, give this answer. And in the break, we have a cup of tea together. Immatures are those who say a lot can happen over coffee. Bro, if we have a tea together, I already have a crush on you. Come on, don't disappoint. Try karo. And believe me, you will get the right answer. And the tea is on me, huh? I say tea and then you have to pay for both of us. Nahin. The tea is on me. Bro, online I can only give you emoji of tea. COI. What will be the COA is what I am asking. What is your answer? COA will be COA. No. My question is, what will I write here? Because this is my market selling price. But I have to pay tax on capital gain, so I have to subtract. Cost. What will be that cost? Whether cost, see, we know that now it will be only cost. For a limited purpose, there will be indexation. That we will see. But what will be taken? Before indexation also some cost has to be taken. No. What will be the cost of acquisition?
लाइक जो पहले प्रॉपर्टी जो ट्रांसफर हुआ था हम लोग को नया प्रॉपर्टी मिला तब हम लोग ने कैपिटल गेन कैलकुलेट किया
see you have no because you waited for CC. देखो, are you selling new property? That means you have received your new property. And if you have received your new property, which simply means that CC ka you did wait for the CC. See, there are two possibilities after my old property is handed over. One, I don't wait for CC and I hand over the rights to the developer, then the normal capital gain will come. 45(5) are not applicable. And this can't come only, no. Because I never got the new property. I sold it before only. Correct? Eh? Second possibility, I wait for the new property. I get the new property. That means this has happened. So what will be your cost? 0? Wrong answer. कौन सा transfer charges? Which stamp duty? Stamp duty. अभी now between the two of you all, you are sort it out because he has this habit. He will just do the warm up and leave it in between. This is the third time you have done it. You have this problem of lack of confidence. You are thinking the correct thing. You start the correct track. And in between you leave. Then you need someone else to push you. But exam mein that won't happen. Whatever you are thinking, maybe it is wrong. But better to write it than not to write anything. Because not writing is definitely 0. Wrong writing can also worse be 0. There is no negative marking. Even in MCQs here. Foundation mein tha. Negative marking in MCQs. Here you don't. Not writing is not acceptable. Stamp duty? No, you were thinking right, but you don't have the willingness to speak. What will happen? Say you say the full thing. Stamp duty is stamp duty value. Stamp duty is the tax that I pay. Correct? Eh? Then someone else pushed you. Yeah. A problem is that you starting that answer is giving hint to two others. No? Bro, it is increasing my expenses. So either you speak full thing or you don't speak anything. Had this been a a date kind of offer, or if I say I will divorce my wife and marry you, etc., then so I would have said, "Bakbak, ऐसे together you are doing, cancel, offer cancel." But chai to fir manageable between the two of you all decide, and both also, thankfully, it's only a cup of tea, so both also manageable. Tension nahi. Okay, most welcome. The correct answer, yes, is, please understand, whatever I have taken as sale consideration above in the last transaction has to become my cost of acquisition in my subsequent transaction. That is the sale consideration at the time of 45(5)(a). And what was that? Stamp duty value plus the amount in money. That total amount will be considered as your cost of acquisition. See, logic hai na? Once upon a time I had paid this amount for the old property, and today I am getting this amount for the new property. So basically my pocket ka net gain is today's selling price minus my old property ka cost price. But till this much value, so I have already paid tax earlier. So now I have to pay tax only on the excess, the balance. And therefore, whatever was taken earlier as selling price, if I subtract that in the form of cost price, I am going to solve the problem. Are you understood kya, bro? Everyone? 100%? Fantastic. Shall we? That was your concept of joint development agreement. Redevelopment. You give your old property. Against that, you get your new property. Hello. What is going to be your sale consideration? Stamp duty value plus monetary consideration. This will be taxable in the year of CC if you wait for CC. If you don't wait for CC, get money pehle in advance, then the normal capital gain will be taxable. If you wait for CC, then your 45(5)(a) will be taxable. But in future, if you ever sell the new property, so sale consideration will be actual, cost price will be whatever earlier you have taken as selling price. Clear hai? Fantastic. Point number 7, 8. Of what list? Don't forget, we are doing special cases of gross sale consideration. Section 46, subsection 1. Section 46, subsection 1. Liquidation of a company. Whenever a company under liquidation is transferring its capital asset to the shareholder at the time of liquidation, this transaction for the company is not a taxable transfer. Sir, why is this not a taxable transfer for the company? Company is not getting any consideration. So then how can you teach us computation when it is not a TT? Have you lost your brain? Yes, it is a taxable transfer for the shareholder. Which asset is being transferred? Let me explain the question. Okay. Supposingly, shareholder is getting land from the company. Example, land from the company. That means capital gain is coming on which asset? Land. Rubbish. First mistake which the best of students make is not understanding that land is not the asset that is attracting capital gain. Capital gain cannot and will not come on what you are getting. Capital gain is the gain on the transfer of an asset, and land you are getting. Land is not getting transferred. Get this mistake rectified right away, because if you don't think this correctly, you are in the wrong direction already. This is transfer of shares. So please understand. Think about it as a shareholder. What did you purchase and you are still holding? Shares. Suddenly company says, "Ooh, your shares, Baba." Correct or no? But no need to cry, dear shareholder. Why? Because against this, we are going to give you Land is an example. Any asset. Correct? That means, are you getting something against your shares which are extinguishing? What are you getting? This is capital gain for the shareholder. Correct? Now, if the shareholder sells his shares in the market for normal monetary compensation, then we will come to this meaning. Remember, we are doing special cases. These are those cases where selling price is not easily available. So we will have to put our effort to determine our sale consideration. Correct or no? Of course, from this we will be subtracting cost or index cost. See, till 22 July you have to subtract index cost if long term, of course. And from 23rd it is going to be cost. And these are shares. So one thing is very, very clear. In this case, in the future period, even for tax calculation, there won't be any indexation, because that indexation is only for the marginal benefit of compare old tax and new tax for resident, individual HUF in case of immovable properties. Correct or no? So can I say we will be writing the actual cost? This will give me my capital gain. Bro, we are doing the whole concept to know the answer for this. This whole concept is taking place for this particular answer. Correct है? What is the answer? Whatever you are thinking, first of all, is the transaction trigger. Because if you start thinking that capital gain on land, you are already thinking wrong. Capital gain is on shares, and against my shares I have received land. Correct hai? I have not received money, so therefore it's a special case. What is the answer? Whatever you are thinking is the correct answer. That is 90% correct. 10% you have to be wrong, because you are CA inter students. You will be making this mistake. But at least I give you 100% even if you give me that much. As per law, that's not correct. But what you are thinking, I take it as the correct answer. Say it. Just say it. The market value of shares. So rubbish, bro. So then you are not thinking correct at all. Which is the asset that is triggering your capital gain? Land. Capital gain is on shares. See, please understand, when one asset goes, another asset comes. That means that you have not understood this point. Just tell me one thing. What is going? What is coming? What is going? What is coming? Capital gain comes on the asset which is going. So if I ask you transfer of which asset, your answer will be shares. Selling price is not what is going. Selling price is what you are getting. That 90% correct answer was also if you would have said value of the asset received. It can't be FMV of shares. Is that mistake rectified? Understood at least what went wrong? Fair market value of shares can't be the answer, because shares are going. Capital gain on shares, but selling price cannot be shares. Selling price will be what you receive. Selling price is never what you give. Selling price is always what you. Fair market value of the asset received. Fair market value of the asset received. Are you clear of the mistake that you were making? Is this clear? This is not fully correct. This is that 90% correct answer. But everyone is clear till here. This is something that requires no explanation. Which asset is going? Which asset is going? Therefore, capital gain on shares. What are you getting against those shares? Land. And therefore, selling price is the value of that land. And therefore, if I say that what I get in return is my selling price, then FMB. That is something that everyone understands. Slide paste here. From this FMB, we will subtract something called deemed dividend under section 222C. and that net amount will be my sale consideration. From the FMV, I will be subtracting a concept called deemed dividend under section 2, clause 22, subclause C. If from this calculation, I remove this part, you don't remove it. If from this calculation, I remove this part, have you understood the rest of it? I am getting land against shares. So cost of shares and selling price is value of land. And fair market value of the asset that is received. That everyone is understood. Everyone has understood. What is the only thing that requires explanation that will get, you will get clear, okay, what is this? Why is this a special case of GSC? Sir, what do you mean by what is this concept called deemed dividend? Why are we subtracting? Answer is hidden is what is deemed dividend. See, if you understand what is deemed dividend, you will automatically understand why are we subtracting it. What is this deemed dividend? For a moment, let's go leave this concept and let's go and learn what do you mean by deemed dividend. Deemed dividend in income tax law is defined in section 2, clause 22. 6 types है deemed dividend under 222A, B, C, D, E, and latest amendment is 222F. B and D never come in exam. A, C, and E have been on and off asked in exam. F is an amendment, so first exam after F is going to be May 25, newly introduced clause. This I am doing now. This, and this we will learn in income from other sources. By the way, dividend is taxable under IFRS. But 222C has direct impact on cap. चाय पी रहे हम लोग 222C has direct impact on 222C directly affects my sale consideration in this transaction. So 222C I have to discuss now. Of course, if I discuss now, then later I don't have to discuss it again in IFOS ka chapter. In fact, if you understand this with sincerity, this explanation is also over. So IFOS ka chapter predominantly will be to focus on these two. B and D also I will do, but I won't waste too much time because they never ask in exam. But I'll do them, don't worry. My first focus right now is, sir, what do you mean by deemed dividend under 222C? Dividend word ka meaning to you are aware. Profit distributed to shareholders is dividend. Everyone knows this. But how does any company distribute? They conduct AGM. Proposed by directors, declared by shareholders, something like that. Or interim dividend is declared only by directors. When a company declares interim dividend or final dividend, they make tall, wide open announcements. Hey, dividend, hey, dividend, 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 dividend. They make open announcements to the whole world. And we know what is dividend. Once upon a time, companies were supposed to pay tax on the distribution called DDT. Some years ago, that DDT was abolished. And now dividend is taxable for the recipient shareholder. Same thing has happened with buyback this year onwards. Once upon a time, buyback was taxable for the company only. Till 30th September, even now. But from 1st October, buyback is taxable for the receiving shareholder itself. But when the company makes open announcements, everyone is up. Sometimes is it possible that a company secretly calls its shareholder? Dividend, dividend, dividend. Secretly distributing its profits without making open announcements in the market. Without making open announcement in the market. Secret distribution. Is it possible? That is deemed dividend. And how is this company secretly distributing? Let us understand with the help of a balance sheet of a company. In this balance sheet, all the amounts are in lakhs. The company supposedly has share capital of 20 lakh. The company has reserves and surplus of 80 lakh. Whenever I studied accounts in life, I did like this. Balancing figure. I treated balance sheets like ledger accounts. Bro, balance sheet should tally naturally or artificially, but balance sheet should tell you. On the asset side, we have land. The cost price of the land was 100 lakhs, 1 crore rupees. But do you realize that our accounts will record historical cost? Historical cost, you understand? Original cost. This cost was incurred, 5 years ago, 10 years ago, 20 years ago. Today's market price of that land is not, obviously not 1 crore. This is where Ind AS comes into picture. I know you all are not studying Ind AS at intermediate, but final accounts ka paper is all about learning Ind AS. Ind AS basically is fair value accounting. That today's market price of this land, if sold in the open market, has become 5 crore rupees, 500 lakhs. But the balance sheet is showing historical cost only. If I am someone who is new to this company, I will read the balance sheet. I will find 1 crore as a totally worthless answer. If I want to check whether this company has good assets or no, this is a meaningless value. This gives the real picture today. So basically, Ind AS is based on the small policy that all assets and liabilities will be recorded at today's value. But that will be abnormal changes in the balance sheet. And to reflect that, we have to pass the other entry somewhere. And therefore, our profit and loss account, which you are making as trading and P&L, will not be trading P&L. There will be part 1 P&L, which will cover all your trading and day-to-day activities, and part 2 P&L, which will record your abnormal entries. That part 2 is known as other comprehensive income. You have no idea about India's new format of P&L, other comprehensive income. Just understand fair value accounting. So everything will be recorded at fair market value. But historical cost balance sheet will record original cost. My question to you is, if we go and sell this land in the market, how much money we will get now? 5 crore. But the land in books is recorded at 1 crore, which is a totally meaningless value, believe me. Believe me, it is a totally meaningless value. Believe me that if we come to this calculation, I remove the dividend part because that's your only complication. If this was the answer, so everyone has understood. So we will not be taking 1 crore. 1 crore is meaningless. 1 crore was valued 20 years ago. Today, what is the value which the shareholder is getting? 5 crore. So what is sale consideration? Obviously 5 crore. Correct? But one thing I would like to clarify, that full 5 crore cannot be sale consideration of one shareholder. Supposingly I am 10% shareholder in the company, so I will be taking cost of acquisition only of those 10% shares. So here in the fair market value also I will take only 50 crores, 50 lakhs, sorry, not 500 but only 50. See, one thing everyone understands, that this calculation has to be done for every shareholder. Every shareholder will take cost of acquisition in this proportion of holding. So when we take this fair market value also, we will be taking everything in proportion. But for now, if we assume that this calculation is the total of all shareholders, so will we take cost of all the shareholders? Then selling price will also be the entire value, which is not 1 crore. That is 5 crore. 1 crore is a meaningless value. Correct? So this part to everyone understands that today shareholders are receiving land worth 5 crore. 1 crore is a meaningless value to be ignored. Today the shareholders are receiving land worth. Today the shareholders are receiving land worth. So what is selling price of the shareholders? 5 crore. But then, sir, from this 5 crore, what is this dim dividend that you are subtracting? There is some logic hidden there. Have you noticed a few things? First thing, the company has only one asset left. You know why? Because the company is under liquidation. One by one, the company has sold all the assets, and therefore it is left with the last asset. Have you noticed another thing? The company has paid off all the liabilities also. We are left with only one person to be paid. That is your equity shareholders. Remember, under liquidation, last person to get paid is equity. Bro, we have paid all our creditors, all our loans. Bro, we have paid our preference shareholders also. We are only left to pay whom? Equity shareholders are the only people left remaining to be paid. Can you clearly observe that? Because the company is under liquidation, we have to pay money only to our equity shareholders. We have to pay only to our equity shareholders. Everyone is with me? Think about it from the equity shareholder point of view. When this company started, all of us are equity shareholders. Of course, one person cannot be owning the entire company. This 20 lakh will be owned by many people. And that land also has to be distributed by those people amongst themselves. So individual shareholder calculation will be individual share of the land and individual cost of the shares. But we are having a total picture. And then in that proportion, we can tax the shareholders in the proportion of holding. As shareholders, to start the company, how much money was contributed by us? 20 lakhs, you agree. Over the years, the company has made profits and accumulated reserves of. Everyone agrees that these are nothing but profits of the company. This money could have been once upon a time distributed to us only in the form of dividend. But the company wanted to retain funds in the business. We did not force the company to give dividend. But need not worry. One day, today or tomorrow, sooner or later, we are only the owners of these profits. Means one thing is for sure, that one fine day, we are going to get our original money back. And we are going to get this money also, because these are our profits. We are the shareholders. We own the profits. You agree with that? Who owns the profits? Equity shareholder. And when we have paid off all our liabilities, so the profits completely belong to us now. We don't have to pay to anyone. Correct? Eh? But problem is this, that the company now is left with no money. Cash nahi. Company does not have cash. Company has only one. And by the way, company wants to go under liquidation. So yes, the company has an option. Sell this land in the market and get 5 crore rupees. Then the company will have capital gain, selling price 5 crore, cost price 1 crore, pay tax on that capital gain. And after paying tax also, whatever cash is left, ultimately we have to pay them only. So why take so much effort of selling the land, then paying the income tax on sale of land, then calling shareholders, then distributing the money, bro? Ultimately, all money we have to give you and liquidate the company. Company calls the shareholders. Come here. Company has basically handed over the asset, which in our example is land, to the shareholders. That means if you observe carefully, the receipt of the shareholder is land of what value? 5 crore. 1 crore is a meaningless value. Correct? What does this mean? Please be careful. This will explain the concept. This means that I have received whatever I could have from the company. Company is gone. You know, journal entry of the company. Share capital account debit 20 lakhs. Reserves and surplus account debit 20 lakh. To land account 100 lakh. Balance sheet over. You understand? These are credit balances. Debit them and remove. This is a debit balance. Credit it and remove. Balance sheet will be eliminated. Correct? Eh? As a shareholder, my expectation was, give me this money back. And these profits are also mine. Give me this. Company says, bro, I have only one thing to give you. What do I have? Land. You take it. This is all inclusive. When I am giving you the land worth 500, this includes your profits also, and this includes your balance against your shares also. Whatever it is this. Take it and please leave. So have you received your profits? Profits were worth how much? 80. But the land is worth 500. In that value, 80 I have received against my profits. So what is the balance? 420 is what I am getting for my original investment of 20. What was my cost of shares? 20. For you, it appears that against those shares of 20, I am getting land of 5 crore. No, sir. I am getting land of only 420. Oh, no, sir, the land is worth 5 crore. Yes. You are getting that 80 also. You are only getting. And you have to pay tax on that 80 also. But that 80 is not selling price of your shares. That 80 is distribution of profits. This is your deemed dividend under section 222. See, hey, wait, is this 80 also taxable for the shareholder? Yes, 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 yes. Shareholder has to pay tax on this under IFOS. It is like we have distributed you 80 lakh ka dividend, and we have also given you 420 for your shares, making it the total of 5 crore, the value of the land. Which means this is your sale consideration in capital gain for your shares. Now come here, come here, come here. When I said company is going under liquidation, so my shares will go away. I will take cost of shares. In return, what am I getting? Land. Everyone is with me. In return, what am I getting? Land. Everyone is with me. If I am getting land, so this was the answer that you should have, and you did. You gave instantly. Some of you have made the mistake, fair market value of shares, but now that mistake is clear because shares are going. Consideration is land, and therefore your answer was FMV of land. Land. At that time, that appeared to be correct. Just one small twist, that a portion of that fair market value is your distributable profits. And whatever is that distributable profit, in our example, that amount is 80 lakh. Is that also taxable? Yes! Do I have to pay tax on that? Yes! But under IFOS. So for capital gain purposes, we will be left with, yes, it is 500, but this 80, I am subtracting. So here I am going to take only, bro, in capital gain, how much I am taking? 420. So 80 exempt. No, sir, 80 is also taxable. 80 will be taxable under IFOS. 80 will be taxable under IFOS. And that 80 is deemed dividend. Have we made tall announcements? Dividend, dividend, dividend. Have we made tall announcements? We have secretly given you the asset. That asset includes profits and your shares company, both. So how much is the profit part? 80 lakh. That will be taxable, can I? Yes, under IFOS. The balance will also be taxable as selling price of your shares. Think about it. Now tell me, if you have understood the transaction, shareholders have received land worth. Is this their receipt? And are they paying tax on this entire receipt? Yes. The amount of profits will be, reserves and surplus wala amount will be considered as dividend and taxable under IFOS, and the balance will be considered as capital gain, selling price under capital cost. You have to subtract, and this is how your sale consideration is going to become FMV, which was your answer, minus the deemed dividend. Effectively, this will become your answer. Understood the twist of deemed dividend? But now that we have understood with the help of example, we have to define also. Everyone understood, no? Full fair market value is not going to be sale consideration. A part of the fair market value will be subtracted. Not because it is exempt, but because taxable under IFOS. So that much we are adjusting. Correct? Eh? What was that part in our example amount? 80 lakh. So from 500, we were taking 18 IFOS. So 420 as selling price in capital. But we have to in words now write what is deemed dividend. See, you have understood in the example what is deemed dividend. But in words, in 222C, they define deemed dividend to be the fair market value of the asset distributed. Please pay attention, everyone. Have we made tall announcements in the open market that we are distributing dividend? No. Have we paid that cash dividend? No. We have secretly called our shareholders and handed over land. What is the value of the land? That is deemed dividend. Wait. But as per company law, the maximum deemed dividend can be to the extent of free reserves that a company is having, because company law says a company is allowed to distribute dividend only from its free reserves. P&L account, general reserve. There are some reserves which are committed reserves. DRR, CRR. Those reserves cannot be used for all other purposes, and dividend distribution also not allowed. So only to the extent of free reserves we are going to consider as deemed dividend. So we again went and checked. What fair market value of the asset? 5 crore. However, we can't take 5 crore as dividend because dividend will be restricted to the amount of reserves. And how much are the reserves in our example? 80. So we are going to restrict dividend to 80. And where will the balance go? Capital. Maximum deemed dividend will be equal to free reserves. Understood? Which is how we got the division of 80 and 420. How much value ka asset we are getting? 500. Are we going to pay tax on full 500? Yes, 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 yes. 80 will come in dividend, IFOS, and 420 will go in capital. Everyone is clear? For writers, you wrote it in bracket? No, because it is not over. Second last explanation, then one more thing will come. Last two things have to be discussed. Okay. While explaining this second last thing, there is going to be a question that I will ask you. And in the last thing also, there will be a question. The one who answers the first question will get first chance to answer the second question. And anyone giving all the answers correctly here, tea coffee is too small for you. Too small. Pakka, pakka, pakka. We are today, see, I am taking morning lecture. Afternoon, I am taking seminar. So evening, I am going to be free very early. And you are free only. You have nothing substantial to do in life. So we won't postpone it to any other day. We are doing it today itself. Huh. Provided you give both answers correct. Hello. Huh. We are doing it today itself. We won't postpone it. Come and observe this balance sheet. How much is the share capital? Reserves and surplus. Original cost of land. Original cost of land. The meaningless way. Abhi say wrong purpose. Matlab, sir, we are not interested. Don't make it so obvious. What is the current market price of the land? 5 crore. Correct? Hai? When this 5 crore ka land was distributed, shareholder has to pay tax on 5 crore. But to the extent of this amount, it will be taxable under IFOS. And only above this, if any balance is left, so that will become selling price of my shares. It is like out of this 500, I am getting this 80. And the balance I am getting for this. And therefore, the 420 is becoming selling price of the 20 which was cost. Cost was 20, no? Against that, shareholders are getting land worth 420. That means, can I say effectively 500 is taxable, but 80 under IFOS and 420 under capital gain. One thing you will have to understand that IFOS, there is no special rate. So IFOS will be taxable at normal rate, which can go up to 30% being 80 lakh rupees. IFOS can go up to 30. Correct? Capital gain mein whatever you put, and it is understood that it will be long term. See, shares can be listed or unlisted. Before or after in shares, there is no change if you think about it. Listed was 12/24 till 22 July also. And from 23rd July also it is 12/24. It is taken for granted that 24 months must have easily crossed since I became shareholder. Company is going in liquidation, bro. This whole process will take that much time. So let us take it for granted that the shares are long term. And therefore tax rate will be only 12.5%. Think about it. Means, just imagine this 500 ka breakup of 80 and 420. See, as a shareholder, I have to pay tax on both of them. To me, it does not make any difference how much goes year or year, for the simple reason that for me as a recipient, full 500 is taxable. But anything that is taxable here will have higher rate of tax, because normal rate will be 30%. And anything that is taxable here will have lower rate of tax, long-term capital gain 12.5. Matlab, the whole intention is, I would want to have more and more value here and try to remove this entity. You understand? Deemed dividend. Full fair market value would have become dividend, but it cannot be more than reserves, and therefore this amount became the value of my deemed dividend. And I took the balance here. If this amount was not there in the balance sheet, then how much will be deemed dividend? Nothing. Then full amount 500 will go in. Still I have to pay tax on 500, but it will be taxable at a lower rate. So everyone agrees with the statement that showing more amount in capital gain is better than IFOS. But I have to show IFOS because of this 80. If I remove 80 from balance sheet, so I will be able to achieve this. So fantastic, ladies and gentlemen. Understood now what is happening? Logic. Fantastic, ladies and gentlemen. Let us remove 80 from the balance sheet. Let us send this 80 here. Make this 100 make this 0 by passing an entry reserves and surplus account debit to equity share capital. Send this 80 lakh. Is this 0 now? Is this 100? After passing this journal entry, give your asset to shareholder. How much worth asset shareholder is getting? 500. In any case, he has to pay tax on 500. Out of this, how much is the reserves and surplus? 0. So how much will go in IFOS? 0. And full 500 will become selling price in capital gains. So in any case, taxable value still remains 500, but lower rate of tax. Correct? Hai? By eliminating the reserves, magically, I am saving tax on that 80 lakh. Lower rate of tax at least. What is this journal entry? What have I done? कौन बोला? क्या? What is this? Huh? What is this? No, don't repeat the entry. I explained the meaning of this entry. हाँ, तो what do you call it? वो क्या होता है? क्या? What is capitalization of profit? Anyone? Sure. Offer gone. Hey, wait. I confirm, no? I asked no what? You have the... नहीं, एक मिनट. The moment you said bonus, it was right. So I immediately asked no who it was. I asked or I did not. I asked no. एक मिनट. तो नहीं, एक मिनट. I asked no. I told you to repeat no. I gave you the chance no. I told you no. Say it. Did you say it for the second time? See, first time when you said no, it was not even when you were participating. I was still asking something and I didn't even know who is speaking. You should have said it by raising your hand. That would have been considered as an answer. But because it was the correct answer, I heard the answer. I decided to give the first voice. I didn't even know who it was amongst you all. I decided to give the first chance to the first sound that came. But then itna easily I can't give you itna offers, no. I will confuse you. See, in a tea coffee offer, no, I won't confuse you. Even if you win, it's okay. हाँ, तो cheating है. Go file a complaint. Which is the nearest police station to your house? Where do you stay? Nearby. So which is the nearest police station? The other. Go and file a complaint. Sir has done cheating. Go. पागल औरत. Lawyer कौन? You are studying law also. Then you will know that your complaint won't be filed. That policeman will give you 2 tights. पागल. नहीं, your lack of confidence is not acceptable. If you said, then you should have stuck. And this is account, not tax. You are not confident in accounts, it seems. Huh? I will have to pass on the information. तो bonus issue है. Understand? Capitalization of profit. Technical term people are speaking capitalization of bonus issue. Of course, you split the entry into 2 parts: reserves and surplus account debit to bonus to shareholder account debit to equity share capital. With this, by declaration of bonus is within the company's control. One benefit is we are removing the reserves. Second benefit, see, understand, you practical benefit. Every time a company's balance sheet has reserves, no? So in AGM, shareholders insist on declaration of dividend. Shareholders request, sir, you have profits, please give dividend. Please give dividend. Because there are profits, shareholders insist on distribution of dividend. But if we remove only these profits, so shareholders can't ask for dividend because there is no distributable profit. And we can retain the cash flow with us. What have we done, bro? We have declared bonus. By declaring bonus, have we removed our reserves and put the full money in share capital? Come on. Yes. And therefore, we will be escaping this split, no? Because now what is the amount in profit? 0. So full 500 will come in capital gain. So, sir, still one more time I would like to tell you, shareholder is in any case going to pay tax on full amount only. Just that much will be lower rate of tax. But bro, income tax lawmakers are not so foolish, and therefore free reserves will include your capitalized profits. English, that is bonus. So listen, even after we pass the entry, everyone, in the balance sheet, what is my free reserve? 0. But for the purpose of this calculation, we will still take entry, which is why every time you make balance sheet and this share capital has some free shares, we write in bracket of the above these many shares were issued as bonus shares. For the purpose of deemed dividend, that much will be still considered as free reserves, even if you have removed that purposely by passing the entry. So final answer is, even if you try to do this cheating, no, 80 will still be taxable in IFOS and 420 will still be taxable in capital gain, even if you eliminate your profits artificially. Free reserves will include bonus. Everyone clear? Last concept here. Anyone who had given the correct answer of this, what is this bonus, would have been given the first chance to answer the question. Here, now openly, anyone can give the answer, but understand the question first. You can't answer any question which you have not understood. Too deep, no, bro. Early morning, sir is giving the answer. You can't answer a question which you haven't understood. Hi, yaar. है ना? Please make sure you use this in strategic management, because that's your only strategy for strategic management. You all are still lucky enough that you all don't have EIS or IT or HCA final ISCA. Which is the subject that is giving you maximum trouble? Bull-DT. No subject is giving you maximum trouble. We believe only in quality coaching. I can understand. You all are confident about every subject. General coaching system in CA at least is that 2 or 3 subjects will be good. The rest of it will only be average cost. See, if we have 3 expensive teachers to 3 low cost teachers, to average out the cost of running a batch. Because total collection and total cost. And every expensive faculty means that the other subject of faculty will be further lower cost. Because total cost can't increase beyond a certain limit. It is about which class has got the maximum high cost faculties. There is certainly shortage of accountability as far as CA coaching is concerned. People go behind brands, names. Oh wow, this brand is making these many crores or that many crores, that means it is good. Bro, it is making crores because it is hiring low cost professors. Therefore, it is making crores. No, otherwise, how will it make those crores? And you're not interested in brands. No, this is not a t-shirt or a shoe or a bag. Wow, mera Gucci ka bag. Wow. You don't have to flaunt this brand in front of anyone. You have to flaunt your CA degree. So a teacher who answers your doubts on WhatsApp within 48 hours. You understood this? I am coming to my next question. My next question is, under liquidation, have the shareholders received assets? Following things are over. Company is over. The shares are also over. We have the shareholders and the shareholders have received that asset. So they have the asset. Is it possible that the asset that was received at the time of liquidation is sold in future? Asset received at the time of liquidation sold in future. Is it possible? Possible, no? Will there be capital gain on the shareholders again? And I'll tell you what. If I say no, sooner or later they will sell the land is also an incorrect statement. Sooner only they have to sell. Because think about it. Land will be given to thousands of shareholders as joint owners. How long are you going to remain joint owners with so many shareholders? You will want to exit, no, take your money and exit. Together, the shareholders will have to sell the land and distribute the money amongst themselves. Do you agree? This is India, boss. You cannot be remaining joint owner with your own sibling also for a very long time. Even if you are joint owner with your own sibling, no, one fine day you will have to partition. This much portion you keep, this much portion I keep. Or if that is not possible, some cases it may not be possible. We cannot be dividing it. So there is only one option. Sell it and distribute the money. And in case of multiple shareholders, it is going to be within a few days of liquidation. But even if within a few days, will there be capital gain on the sale of that land? On whom this time? Again on shareholder. See, earlier against shares they got land. Now against land they are getting money. There is capital gain on sale of that asset, for which there will be sale consideration and cost of acquisition. This time the sale consideration is easy because we are selling the land in the open market. See, last time against shares I was not getting money. I was getting land. So last time sale consideration was complicated. Correct hai? This time cost of acquisition has to be complicated because this land, as a shareholder, I had not paid money and purchased. I got this land at the time of liquidation. Sale consideration is to whatever we sell in the open market. Ladies and gentlemen, boys and girls, what is going to be the cost of acquisition to give you the capital gain? You understood the question? Fantastic. Eligible for offer. Both. Wrong answer. Because I already heard the answer, no, therefore I made you eligible. By the way, you are already disqualified when you did not say bonus with confidence. There are only two answers which a student can give here. One was, sir, we have studied joint development agreement. So our mind is saying, whatever we have taken selling price earlier, we'll take here. And that answer was FMV minus deemed dividend, which is wrong. And the second answer is, bolo, full 500, full FMV. Means, we are not taking FMV minus deemed dividend. We are not taking this value. We are taking this value, full FMV. Why? The general rule is whatever is selling price earlier will become cost price. Selling price earlier will become cost price. Now in our example, earlier selling price was 420. Not because 80 was exempt. 80 also was taxable on that day. Where? That means have I paid tax on full 500? Is the amount till 500 already taxed for shareholder? The shareholder will take full 500 deduction. Full selling price can't be the answer here because that selling price had the reduction of deemed dividend, not because it was exempt, but because it was taxable under some other head. At the end of the day, I have paid tax on full 500. I will get deduction of full 500. This is not something that is instantly expected. See, what is my instant expectation from student? Especially after doing joint development agreement. Yeah, selling price earlier is cost price now, and therefore I give the offer because I know that everyone is going to give that answer. At the same time, this is capital gain. If your basic, your common sense is clear, you may probably guess the correct answer also. At the same time, don't forget this is capital gain. So there is slight possibility that someone gives me the correct answer. But I don't want to give the option. So therefore, I keep both options open. That reserves and surplus kind plus this. And give eligibility only to someone who gives both answers. No one gave both answers. नहीं बोला क्या bonus? उल्टा bonus में you could have said I didn't hear also who said it. She only said you. तो बस that is not my problem. Ladies and gentlemen, full FMV. See, main point is not who is getting offer, who is not getting offer. Main point is, do you understood or no? And do you realize how we mean, by the way, if in case it was not clear? And you also understand one more thing, that in capital gain, somewhere you are going to get the answers by yourself. It may not be 100% accurate, but then ultimately I am teaching also, no? Once you know the concept, subsequent occasion, you don't have to memorize all this. Think about it. Once you understand, capital gain does not require memory power. In PGBP or perquisite valuation, you have to probably learn a few things. Capital gain only expects you to understand. Once you understand, you are done. Is that clear, bro? So ladies and gentlemen, at the time of liquidation, we will take fair market value minus deemed dividend. But at the time of subsequent sale in cost, we will take full fair market value. Everyone is clear? This was point number 9 of special cases of GSC. That means what is this point number 10? 8th, huh? 9, 10, 11, 3 are left. Sorry, my bad. Point number 9. Of what list? Point I will discuss. Point number 9 of special cases of gross sale consideration. You understand? We are left with only 3 more, but point number 9 is big. We have already, last 2 were also very, very big if you observe. Starting a few got over very fast, but the last 2, joint development as well as liquidation, were big. So this is also very big. We'll take a break of 15 minutes and we'll continue after the break. Okay, welcome back, ladies and gentlemen. After the break, we are doing point number 9 of which list special cases of gross sale consideration. Those cases, those situations, those places where your gross sale consideration is not going to be easily and readily available. Correct hai? Section 50C. Are we learning it for the first time? But we already know something about it. Coffee diya uske? But we already know something about it. Exempt. Exception. Exception of what law? The AO can question the amount of gross sale consideration. The AO can question the amount of gross sale consideration. Means here, if your amount received is lower than the market price, AO has the right to question. Is that clear? But now let us go into the detailing. This is transfer of immovable property. Do you remember my friend from Ahmedabad? What do you remember about him? 200 per? I never mentioned any amount in net worth. Diamond. Means these are not the things that you are supposed to remember. Thank God no one said, sir, which brand of perfume? Oh, Dhakkan. Focus. Thankfully, hey, you remember that? Break, chal, chal. Then in the break, which brand of perfume do you use? Oh, same perfume, let us buy one in the next break after class. Then every day, a range of classic perfumes. Some of them were gold plated. Correct. In breakfast, we had corn flakes. Flakes. The effect was very, very mild. He gave one statement which was very important for us to understand the concept of house property. He said, take whichever is higher. Wherever there is land involved, there will be cash involved. In rental transactions, we had to do actual or market rent, whichever ALV or actual, whichever is higher. And same thing. At that time also I told you, capital gain ka chapter will have the same rule. Even at the time of sale, Same thing happens. First thing that we discuss at the table is what proportion is going to be cash. And everyone knows that it is existing. And thus, ladies and gentlemen, the gross sale consideration here is going to be the actual sale consideration. Is the amount that you have received in check, because cash part you are not showing, or the stamp duty value of the property, whichever is higher. Actual sale consideration or stamp duty value, whichever is higher. Stamp duty value is the market price as computed by local authority. So, local authority is computing two values of my property, the rent earning ability and the sale ability, and income tax law is considering both of them. In the rent wala chapter, they are taking actual rent or market rent, whichever is higher, and in the sale chapter, they are taking actual or stamp duty value, whichever is higher. So, supposingly, I sell my property for 5 crore, but the market price of the property is 6 crore. So, even if I have received only 5 crore, I will have to pay tax on. Do you understand this? What if it is the other way around? Just in case. Supposingly, this is 6 crore and this is 5 crore. So, in any case, I will be paying tax on 6 crore. Let us also, for a moment, we are not interested, but for a moment, let us consider this from the buyer point of view also. See, as a seller, I will pay income tax on my selling price. Buyer has to pay that tax called stamp duty on the stamp duty value of the property. So, here the buyer will pay stamp duty on 6 crore. Income tax will consider this only as my selling price. Your income tax is so okay with my actual amount. I'll tell you what, municipal corporation is also very smart. Municipal corporation levies stamp duty on the buyer on whichever is higher. So in a case like this, they would have taken stamp duty on this amount. But if you do the actual transaction at a higher price, so in other words, seller's income tax or buyer's stamp duty both come on whichever is higher. And ladies and gentlemen, our class has an objective that every day you must get a feeling, wow, I got to learn something new today. Wow, ladies and gentlemen, you all are chartered accountants, chartered accountancy students. Soon in your life, people will want you to sit in their deal and mutually decide how much should be the cash part. So first they have to decide the total. We see total is basically free consent of buyer and seller. In this total, we have to divide into check and cash. The check part has to be to the extent of stamp duty value. Because anything below stamp duty value is of no sense. Buyer still has to pay stamp duty on stamp duty value. Seller still has to pay tax on stamp duty value. But anything higher than stamp duty value is stupidity of the highest level. Because if your actual is higher, buyer's tax will also increase, seller's tax will also increase. If stamp duty value was 5 crore and we do the check part in 5 crore, the seller has to pay tax on 5. Buyer has to pay stamp duty on 5. Higher, lower, both not acceptable. Best amount is stamp duty value. Every time you do a property deal, stamp duty value. No one has income tax officer in their family. Recently, I happened to purchase home and office both. So when I purchased office, I clearly told that guy, I will pay you stamp duty value. Whatever be our final price, you don't expect a single rupee extra from me, because anything that I pay extra, that increases my stamp duty by 6%. Why should I pay that extra? Extra, whatever it is, we will settle the difference. In case of that home part, also, the seller was NRI. So, he wanted highest possible amount in check. But we told him more amount in check simply means more amount of stamp duty. Why should we bet that we are not going to pay? Maximum we will pay you this much. He said, okay. You want to pay this much? This much, so you will have to pay only. No? Below this is of no use. On this, calculate 6%. Is something that you are already ready to pay to the government. I want 2 crore more in check. So that will increase your stamp duty by 12 lakh rupees. That much you pay me less in the total consideration. I want to take the money back to my country. I can't do anything with the cash. Cash will be worthless for me. I will have to spend money on exchange. I'll better pay you only 6%. Don't pay me cash. Yes, it will increase your stamp duty, but I am ready to pay the difference. So finally, that much amount only less I pay. Do you understand? Finally, as a tax consultant, our suggestion is simple: do the transaction at stamp duty value. What is gross sale consideration? Actual consideration or stamp duty value, whichever is that understood? Everyone, but there are twists here. The twists are: one, as a seller, I have received 5 crore and therefore I was ready to pay tax on 5 crore. This value is computed by the municipal corporation. Income tax is adopting this value and making me pay tax on the higher value of 6 crore. Do you realize they are increasing my capital gain directly by 1 crore? Now you will say, no, sir, they are increasing only selling price. But cost is same, no? If selling price is increasing by 1 crore and cost remains same, so gain will increase by 1 crore. If this is short-term capital gain, I will have 30 lakh extra tax. And if it is long-term capital gain, still I will have 20 or 12.5 extra. Unnecessarily, because you are adopting. Some sellers quietly accept this and pay tax on whichever is higher. But some sellers have been given a facility to protest against this. I will explain with some characters in class. Supposingly the assessee is not happy with whichever is higher, so assessee can make one request to the assessing officer. I will explain what this point is. Your first answer is, what is GSC? What is GSC? Your first answer is actual or stamp duty value, whichever is higher. Actual or SDV, whichever is higher. First answer, whichever is higher. Till here, everyone is with me. But the twist, supposingly I am the seller. Okay. Anyone wants to become the buyer in the story? Example, you volunteer or I will pick you up. Kaun? Chandu. Who is Chandu? He is Chandu. New name. So who is Duryodhan? You only. Who is Chandu? You only. और क्या? Chintu also you. Hey Bhagwan. Okay, so let us say Chandu is the buyer. I am the seller. Chandu is the buyer. We need one assessing officer. कौन? Acha, we need someone. You will have to appoint that person because you all know each other very well. Anyone who is too good at arguing, is ready to argue at all times. So, see, everyone is pointing at me. So, she is the assessing officer, and there has to be one municipal corporation. We need 4 people in the story. Seller, I have become the seller voluntarily. Okay, without anybody requesting. Chandu is the buyer. Prerna is the assessing officer, and we need one municipal corporation. No. Akash can't be municipal corporation because municipal corporation believes in birth control. Pratik is the municipal corporation. Bro, at the beginning of the class, I said early morning everyone is fresh. He's like, no, sir. I said to Ruk. Now you wait. Now you wait and watch. Okay? This whenever such situations come, no, the poorest person to be always picked up is the person sitting right in front always. That person is always the first person to get roasted in all these occasions. But I consciously have made an effort. Okay? And it was you only who early morning said, "Ha, sir, आओ." Now you see. 4 people. Me seller, Chandu buyer, Prerna AO, and supplier, municipal corporation. He supplier. Pratik is the supplier. Kachara set. So I have sold my property to Chandu at selling price of actual selling price is 5 crore. 5 crore. 5. Chandu will pay me 5 crore. 5 crore. 5 crore. 5 crore. 5 crore. The actual transaction has taken place at 5 crore. Correct? 2 things will happen. I will pay income tax. Chandu will pay stamp duty. First, Chandu wanted to register the property in his name because he's paid massive sum of 5 crore. He will have to go and pay that to the municipal corporation. So Chandu went to supplier and paid stamp duty on 6 crore because stamp duty value is 6 crore, 6 crore, 6 crore. The buyer has to pay tax on stamp duty value 6 crore. Can I say buyer is now the owner of the property by paying the stamp duty? Fantastic. Now my job to pay income tax to the income tax officer, assessing officer. I show my capital gain to the assessing officer. My sale consideration I have shown as 5 crore. Hey, assessing officer, I have sold my property. So I have capital gain. I am offering the capital gain for tax. I have received how much? 5 crore. Assessing officer, I will show sale consideration of 5 crore. Assessing officer, I will pay tax on 5 crore. Correct, assessing officer? No. Why? Stamp duty value is higher. So, pay tax on. So, AO and assessee are talking to each other. But AO ma'am, I received only 5 crore. So, I will pay tax only on 5 crore. Assessee is requesting. You are understanding the request? The conversation between AO and assessee? Assessee is saying, sir, I have received only 5 crore. So, AO ma'am, I will pay tax only on 5 crore. Okay. Bro, you will resign immediately from the assessing officer ka post. You were supposed to be someone who is good at arguing. My first task, who is good in arguing? Bro, her role only, I will only have to pay her role also. क्या हाँ किसको ना नहीं we cannot be ऐसा नहीं के promoted died so new officer is coming ऐसा we can't change the officer now in the middle of the story but officer का role I will only play officer says no but stamp duty value is 6 crore whichever is higher but ma'am I got only 5 crore no the law says the law says learn karo the law says whichever is but listen ma'am please understand ma'am I first tried to sell my property at 6.5 I tried a lot I did not get anyone I brought it down to 6 knowing that is the stamp duty no one purchased ma'am I was desperately in need of funds no one was ready to come and check also my property at 6 crore then I had to bring it to 580 550 540 520 no one was still buying finally because I was desperate property deals today happen like this only property deal will happen only in desperation either the seller is desperate to get rid of the property at any price or the buyer is desperate to get the property at any price without that property deal cannot happen there is nothing called negotiation in property deals there is nothing called negotiation buyer will just give the offer to the broker this much or no 1 rupee also extra I will not pay tell it to the seller then only we will meeting is formality to discuss check cash seller will say if there is someone who is paying this much then only bring otherwise don't bring you understand this hello but ma'am finally I needed money so I had to sell it at 5 crore please understand I was in desperation I had some monetary need I had to sell it I have genuinely received 5 crore ma'am please take tax only on 5 crore please please come on no why whichever is higher so still you are not willing to accept my problem or understand my problem fantastic now I will use my main weapon you are still adamant no you are still stubborn no whichever is higher means whichever is higher okay fantastic tell me one thing AO have you or anybody in your department computed this where did you get 6 crore from you borrowed it from the local authority everyone look at the face of that local authority the local authority is a brainless fellow always high on some product never in senses crazy has got no knowledge of valuation of properties makes any nonsense random valuation ini mini mina mo 6 crore And not even like this property 6. Hey, he does it like that. He has got absolutely no brains. And his stuff is also of high quality. I have also tried. This local authority has got absolutely no knowledge of valuation of properties. See, if you or your department puts any effort in valuation, I understand my value or your value, whichever side. You are adopting valuation done by some other organization, municipal corporation, which first of all does not have brain and is high on substances. You adopting it is your problem. But you imposing it on me is not fair because my property's value genuinely is not 6. And I tried everything. I can show you evidence. My conversation with the broker. Broker clearly said you won't get this much. Municipal corporation has got no brain. If you or your department has put any effort, then you can fight with me. Otherwise, how can you adopt someone else's value? You are not even putting effort and forcing it on me. That's not fair. Does the assessing make real sense now? Of course, the AO tried to counter this also. AO said, listen, is the municipal corporation brainless? Bolo. Then why didn't you protest against the municipal corporation? Why didn't you object against their value of 6 crore? To which my answer was absolutely correct. That is buyer's problem. Who is paying higher tax because of mistake of municipal corporation? Buyer ka stamp duty is increasing. It is a problem of the buyer. That also only 6%. But buyer is a problem. My problem is if you adopt that on me and force that on me. You understand? You can't force that upon me, no bro. That's not fair. Is the assessing making sense in his request? So dear assessing officer, you can't force a third party valuation on me. And if the assessee exercises this request, see option 1, you chupchap, be quiet and pay tax on 6 crore is also an option. But in case you protest, which now appears to be a very, very reasonable protest, it will be the duty of the assessing officer to appoint a special officer of the income tax department called valuation officer. VO is an officer in the income tax department. His job in the income tax department is to do valuation of properties. Till now, we were dependent upon a brainless municipal corporation, but now we will get the valuation done in-house. The objection of the assessee was what? You are not putting effort, you are borrowing. Okay, now we will value. Now the VO will come in the picture and go and do the valuation of the properties. And following are the possibility. Possibility 1. VO's value is less than what the assessee has shown. Assessee has shown how much sale consideration? 5 crore. Possibility 1, VO is saying, say 4 crore. This VO is a big dash. Customer. Do you remember 5 crore assessee is also ready to pay tax? So are you a fool that you are actually valuing the property at 4? Obviously, you want to guess what will be GSC in such a case. That means, can I say assessee's value, or I may put it this way, less than, you can write assessee here, don't cancel it, less than actual, then GSC will be actual, that is rupees 5 crore. Correct? Possibility 2, VO is doing more than stamp duty value. Example, 7 crore. This VO is also a big customer. The maximum amount which assessing officer wanted to take tax on was 6. AO wanted on 6 kya 5. Then so where was the fight? Assessee was ready to pay tax on 5. AO was wanting tax on 6. So 7 to AO also does not want. See, 4 assessee does not want. 7 AO does not want. You want to guess what will be GSC in this case? The stamp duty value of. But what if I tell you no VO is customer? No VO is foolish. He has the brain that the VO, he has the brain that he has to stay within his limits. The VO has to stay within. And you want to guess the limits? limits, minimum and maximum limits, you have to stay between these two amounts. You can't be going beyond these amounts. You have to give an answer which is between the two. The job of a VO is to bring an in-between value for all practical purposes. The VO will give a value which is greater than or equal to actual, less than or equal to stamp duty value. Example, 5.6 crore. Is the VO bringing a settlement amount between the two parties? And ladies and gentlemen, in such a case, the gross sale consideration will be the value adopted by valuation officer. If this long story has to be kept short, I can only say this much. What was the first answer, actual or stamp duty value? Whichever is higher. Upon assessee's request, BO will give a value in between. Simple. If assessee only requested, if you don't protest, so bro, the wrong will also become right. Correct hai? So if assessee requests, we will call BO and BO will do a valuation in between the two. Everyone understood this? 100%? Fantastic. Third point under section 50C. 50C is big, huh? What was first point? Every time you sell immovable property, actual or stamp duty value, whichever is second, VO will compute a value in between. Third is an option. And whenever in tax we have an option between something, we will always choose wherever there is more tax, because CAs are partners in nation building. No, first build your own career, then build the nation. Charity begins at home. So we will obviously choose whichever is lower. So for that you should know that it is optional. You have the option to take something called agreement date stamp duty value instead of possession date stamp duty value. Agreement date stamp duty value instead of possession date stamp duty value if there was some consideration received at the time of agreement in the three allowed modes. Oh, short-term memory loss. Three allowed modes does not include cross-check, bearer check. What are the three allowed modes? Account pay check, account pay draft, electronic modes. What is this point, sir? What exactly are you trying to say? Supposingly, the buyer does an agreement with the seller. Buyer and seller do with each other an agreement on a particular date. So I was the seller, Chandu was the buyer. Together we have done an agreement that I will give you my property and you will pay me this much. But because the buyer wanted some time, there are two possibilities. Buyer says, sir, we'll do the agreement, but right now I don't have so much cash. Give me the property later. I will pay you slowly. Give me more time. Option 2, seller can say that I am selling the property to you, but my new house is under construction. You can pay me slowly if you want, but I will vacate only after my new house is ready. In between, I can't go anywhere. Sometimes deals happen instantly. Give money, take keys. But sometimes there is a time gap between doing the agreement between the two parties and actual handing over of possession. It can be, more than a year or something. And do you realize when it's such a big gap, there is going to be some increase in stamp duty value between the two dates? Because municipal corporation regularly revises these values. So what happened was, here when we did the agreement at 5 crore rupees. But the possession was handed when? Say 1 year later, 2 years later. So the stamp duty value here is 6 crore rupees. Everyone is with me? One thing everyone has to agree that this is the event that is going to trigger capital. Because doing an agreement, maybe you receive some token amount or something. But as long as you don't hand over possession, property is not considered as transferred even under transfer of property act. If I do an agreement with you today to sell my property to you, what will we do? We'll do an agreement. Maybe I'll take some part payment from you. That is not considered as sale. One day, when you pay me the balance amount and I give you the keys of my property, possession is very, very important. Is the date when we consider transfer. So, one thing you will have to agree that this is the date where capital gain will happen. This is the date. This is the date when capital gain will happen. Capital gain will take place only at the time of possession. That means, can I say this is the date on which I am doing my calculation? Here is when I have to take sale consideration. Now, tell me one thing. What was stamp duty value when I am doing my capital gains? 6 crore. And what is the actual consideration? Going by that, it becomes whichever is higher, 6 crore, unless we call VO. VO will not come always. What's your answer? As per point A, 6 crore. Correct? Here is the objection. Sir, we did the agreement on this date and locked our price at this. When we did the agreement on that date, the stamp duty value has to be different. Because being such a big gap, there will certainly be an increase in stamp duty value. Let us assume that the stamp duty value on this date was 5.6 crore. Everyone agrees that between agreement and possession, the market price of the property has increased by 40 lakh rupees. You agree? That is so clearly visible. At the time of agreement, what was market price? 5.6. And at the time of handing over the possession. Now my question to you is, you have to think and answer. Common sense or practical knowledge, anything will work. If there is increase in market price between these two dates, which is clearly visible, how much is that increase? Will buyer pay me that much extra? Bol Chandu. If we do agreement and later value increases till the time I give you possession, will you give me extra? Agreement means only that we have locked the price, irrespective of fluctuation in market value. So one thing everyone understands, that I am never going to earn the increase that is being shown. That I am never going to get. But my capital gain will be computed on this date only, because possession only triggers. And if you go by that rule, then this will become whichever is higher, which is not fair for me. So here is where we give you the option. You have to do whichever is higher. So with your actual, you have to compare SDV. But instead of taking stamp duty value on possession date, you can take stamp duty value of agreement date. Instead of doing 5 or 6, whichever is higher, that gives you answer of 6. You can do 5 or 5.6, whichever is higher. Do you understand the line till here? See, till here. I'll explain further, but till this line, is this clear? Whichever is higher, but not on the date of possession. If you have done agreement earlier, so the stamp duty value will be lower, you can take that stamp duty value, but you have to take stamp duty. So actual or SDV, whichever is higher, but that can be taken from agreement date also. Correct? Eh? So in this case, what is going to be the sale consideration? 5.6, no? Actual 5 and agreement date stamp duty value 5 crore ke 5.6 crore. Sale consideration I am asking. For calculation only I am asking. What will be sale consideration? 5 crore will be compared with 5.6 or 6. We had to choose one of them. So we are giving you the option of taking agreement date value. But ultimately 5 or 5.6? 5.6. Whichever is higher. Still better than paying tax on 6 crore. Do you understand the option of taking agreement date stamp duty value? The seller is never going to get the extra if there is increase in value. So it is not fair to tax him on the extra. Take the value as per agreement. Correct? Correct. So till the place where I have underlined, everyone is clear. But then we are living in a country called India now. No one wants to know the law. If we stop at this much where I have underlined, so people will start getting ideas. Sir, if I do that, then I will escape. Look at the brains of people. I have not done any agreement. I have not done only anything. First deal between buyer and seller is happening here. What is stamp duty value? If this is the date when everything is happening, there is no past date only involved. Agreement, possession, everything happening now. What is actual? 5 crore. What is stamp duty value? 6 crore. So I should pay tax on 6 crore, whichever is higher, 5 or 6. By chance, if I had done something earlier, so I would have paid tax on 5.6. But if I have not done any agreement earlier, then I have to pay tax on 6. Idea. We will do agreement on this date and we will write date of agreement from here. Backdated agreement. Stating that we had already done the agreement 2 years ago. We had already done the agreement 2 years ago. And I can take that value, no? If I have genuinely done. So people were doing that. Therefore, this facility is only if there was some amount at the time of agreement. Just writing a past date is not enough. How will you say I have done agreement? There has to be some amount. You understand? The further part till where I have underlined, one last part is remaining. But you understand that what is agreement date stamp duty value concept? It is permitting me to take this value instead of this value. But provided I have done agreement. So what are those people doing who have not done any agreement? Writing a past date in their agreement so that they can take this facility. Correct? So we will allow you to do that only and only if there was some consideration. But this some consideration in itself is defective. Some can be 1 rupee also. Hello? They have not said that the consideration has to be minimum 5% or 10%. The token amount has to be minimum this much. In a deal of 5 crore, if I have paid 5 rupees, that is also agreement, consideration. And what we will do is, we will pick up our balance sheet of this day. We are already here, huh? We will pick up our balance sheet of this day and change the cash balance by 1 rupee, stating that there was a token of 1 rupee on this date. So I was done with the agreement here itself. Some consideration can be 1 rupee. And changing cash balance in balance sheet is very easy. That much can be the rounding of difference also. And that difference of 1 rupee we will show as advance. Token, consideration, 1 rupee is also enough. No. It has to be in the 3 allowed modes. It has to be in the 3 allowed modes. Then only we will consider that you had genuinely done. That means I had to take actual or stamp duty value, whichever is. In stamp duty value, I have two options: stamp duty value of possession, stamp duty value of agreement. If I have the option of taking whichever is beneficial, then agreement is beneficial for me. But if I want this benefit, then on this date there has to be some token. Supposingly, when I did this, I genuinely did the agreement. On this date, I took token of 1 lakh as a seller through NEFT. That means have I genuinely done the agreement? Was there some consideration at agreement in allowed mode? So I can take 5.6 crore and my comparison will be 5 or 5.6, whichever is higher. If the token was 1 lakh through NEFT, so my answer will be 5 or 5.6, 5.6. Supposingly, this token of 1 lakh at the time of agreement was cash, then this facility is not available. So the capital gain hai? Yes. This time my comparison will be 5 or 6 and my answer will be, I get the facility of taking this lower SDB only if I have done advance in allowed mode on the date of agreement. Understood? If I dissatisfy the condition, 5 or 6. If I satisfy the condition, so 5 or 5.6. ये clear है everyone? And last point under last point under 50C, point number 9 of special cases of gross sale consideration. Last point. If the difference is up to 10% of actual, no need to apply stamp duty value. Directly take actual as GS. In income tax technical language, they call it a safe harbor. English. In simple language, I can call it an allowable margin difference. If the difference is within 10%, we don't want to trouble. See, what was the whole idea behind this section 50C? That in properties there is cashing. And therefore people are under declaring their actual is actually lower than the actual transaction price. So no problem. If the difference is within the range of 10%, we have no problem. We will take actual. No problem. You don't need VO, you don't need agreement date, no need to do anything. Just take the value shown by assessee without fighting with the assessee. Let us be a little favorable to our taxpayers. We are not going to question you if your difference is within the range of 10%. Understand with the help of example. I will give you the actual consideration. I will give you stamp duty value. We will see what is the difference. And finally, what is the gross sale consideration that we have to take. Supposingly, I start with my original example. What was the actual? 5 crore. What was stamp duty value? So difference is that more than 10%? Yes, then I will have to pay tax on 46. You understood? Supposingly, actual was 5 crore. And now valuation officer came and decided stamp duty value. He said it is 5.6 crore or 5.6 crore. What is the difference? 60 lakh. You just have to check. Is this within the range of 10%? No. So we will have to take 5.6 crore. Supposingly I do the transaction at 5 crore and stamp duty value is 5 crore 40 lakh. What is the difference? 40 lakhs. Is it within 10%? Pay tax on 5 crore. We are not harassing you. Are you understanding? You are understanding? We are giving you a safety margin and allowable difference margin of 10%. Okay, last two. If you understand these two, they are the most complicated. 5 crore, 5.5 crore, 50 lakh rupees. 10% हो गया है. Allowed. So what's my answer? 5 crore. Fantastic. Last. 5 crore. 5 crore नहीं. 5.4 crore. 6 crore. 60 lakh. Still it is equal to 10% only. And therefore we will take answer. Answer will be, because this comparison is wrong. The biggest mistake which students make here is to not be careful that you have to apply 10% bro on here. It is more than 10%. 10% has to be applied on actual. The difference has to be less than or equal to 10% of actual, not of stamp duty value. In stamp duty value, it is equal to 10, but here it is more than 10, and therefore you have to pay tax on stamp duty value. Understood? Hello? If the difference is up to 10%, we will take your answer, actual answer, without fighting. This, ladies and gentlemen, is the capital gain provision of immovable properties. Do you remember that AO has the power to question? Now we also know to what extent AO can question. To what extent AO can question? To the extent of making it equivalent to stamp duty value. 4 points of immovable property capital gain, ladies and gentlemen. Point number 1. Immovable property mein we have to pay tax on actual or stamp duty value, whichever is higher. However, you can request for VO and get in between value. If you have done agreement in the past, that you will have to prove. How? 3 allowed modes at the time of agreement. 3 allowed modes at the time of agreement. You still have to take whichever is higher, but you can take the stamp duty value from the date of agreement. And finally, if the difference is within the range of 10% off, don't make this mistake of actual, then we won't fight only, we will directly take your answer. That's the tax treatment of immovable property, section 50C. Everyone is clear? What is your mind saying? Now I should go to where? Next point, point number 10. I am now going to teach you a section 43CA. You want to guess the chapter of 43C? Which chapter 43CA? Why PGBP? Because 28 PGBP starts and 45 capital gain starts. So between 28 and 45, everything is all provisions of section 50C. I hadn't forgotten 43CA in PGBP, but you can understand 43CA only if you have studied 50C. All provisions to 50C of 50C also applicable in your PGBP if your 50C was about immovable property being sold at a difference in cash. Is it possible that immovable property is stock in trade? To whom is 43C applicable? Please understand, if you are a real estate developer, a builder, so the immovable property that you are selling in the market, that profit is not capital gain, that profit is PGBP. Can developer sell a portion by taking a portion in cash? So for the developer also in PGBP, we have to take actual or stamp duty value, whichever is higher. In that case also we can call BO and take in between. They need agreement that stamp duty value more than 50C. Think about it. Because developers always do agreement first and then some years later they hand over possession. Will the buyer pay the increase in value between the two dates? No. Then poor guy developer can't be paying tax on the new value. He will pay tax on the old value if some consideration in the 3 allowed modes at the time of agreement, and of course 10% margin also over here. All provisions applicable. There is only one difference between 43CA and 50C, and that is this is a PGBP section applicable to your stock and this is a capital gain section applicable to your capital asset. If we eliminate this difference, then everything else is same. Actual or stamp duty value, whichever is higher. VO will compute in between value. Agreement date stamp duty value if 3 allowed modes at the time of agreement, and 10% difference. So this time what will happen? This will be my profit and loss account. The actual year will be 5 crore. But if the answer is 6 crore, so what do I have to take in PGBP? 6 crore. But how does PGBP work? I start with this profit. Income credited, taxable, no effect. And there is this 1 crore which I have not recorded. Income not credited, taxable, and in this profit you add 1 crore, you have given effect to 43C. But the presentation of PGBP is as per Adler's method. Rules are same. Absolutely same. All the 4 points are absolutely same. Everyone is clear on this? Hello? That was your 50C. One last repetition because it is applicable for PGBP, capital gain, both. Every time there is sale of immovable property, actual or stamp duty value. However, VO can compute a value in between the two. Third, we can go for agreement date stamp duty value if there was some consideration in allowed mode at the time of agreement. And fourth, if the difference is within 10%, then take actual. But 10% off actual. Yeah, clear? Next, point number 10 of special cases of GSC, section 50CA. What is the only thing you know about 50CA? AO can question. There were two places where AO can question, 50C and 50CA. I told you that I will be doing within special cases of GSC. At that time, I confirmed with you trust issues. Two people have I know. But I'll be very clear. I promise something which I know I will honor. If I know I am going to dishonor, I will not make the promise. So here in front of you, 50C done, now 50CA. Transfer of unlisted shares. What was happening in immovable property, if you remember? A portion of selling price was being taken in cash, and therefore they brought the rule of actual or SDV, whichever is higher. When there are private companies, please listen. Private companies means unlisted shares. We of late have a very fascinating kind of things called private equity. They're special fund managers. You go to that fund manager, convince the fund manager that your business is really good. I want somebody to invest in my business. I want an equity partner because everyone won't be willing to give you loans. So you have to give equity. You are doing CN, so you are understanding all of this. That bank loan is an option, but bank loan will give if you are having a profit making business. New business, they won't give. For new business investment, your idea is excellent, but nobody is investing. So you approach fund managers. They will bring the funding for you. They will take a massive share of commission. You see mergers and acquisitions happening. You see these many crores paid by one organization to other, etc. The main person here is the middleman who actually brought them on a table. That broker, and believe me, those brokers are paid anywhere between 5 to 10% of the deal. If you can genuinely get a brand sold to someone for say 300 crores, 250 crore, 450 crore, you will get anywhere between 5. Higher the value, then percentage reduces. Say 5-10 crore mein you are selling a brand, 30-40 crore mein, so you will get 10%. But then 500 crore mein 10% is very high, so people will give you only 5%. That's 25 crore rupees. You may not have to work for the rest of your life after that one day. Believe me. See, then it depends on your, human wants are unlimited, resources are limited. 25 crore rupees means there are people who can, bro, 2 generations can also survive. But there are some people who will end up spending that 25 crore in a few months also. That's a different thing, but it's a massive payment in mergers and acquisitions. And of late, it was observed that I am buying private equity in your company. 1%, we do no valuation. 1% at 1 crore means we are doing your valuation at 100 crore. I am buying 1% equity by paying you 1 crore. Openly, we say 1%, 1 crore. But actually, I give 1.5 crore. Because you have told me as a founder in advance that, sir, some cash is also required. My share will remain 1 crore. 1%. I am mentally ready that I am buying 1% at 1.5 crore. But officially, we will show only. Same as what we are doing in property. Companies' shares are being sold to private equity funds by adjusting a difference in cash. Because the investor also has sometimes the investor has cash. He is like, okay, officially I will give you this much, unofficially I can give you this much. In listed companies, no, people don't do that. Because listed company, there is a market price. If you do much of a difference, no, people will come to. See, bulk deal mein, you may probably as a buyer get discount. For example, Adani has got stake in a company called Adani Wilmar. Now Adani is selling its stake in Wilmar to a Singapore-based company. It is doing a massive stake sale, so that company will ask for a discount. Adani may probably sell it at a discount. But small quantities may you won't be able to have difference in cash because listed are always traded through stock markets. But unlisted shares are traded privately. And people are doing exactly as property. A portion of the sale consideration is being paid in cash, to eliminate which we will now say your the GSC is going to be same as 50C. Or but just don't be so stupid to use the word SDV because SDV is only for properties. So we will say fair market value, whichever is actual sale consideration or fair market value, whichever is higher. Actual sale consideration or fair market value, whichever is higher. Means can you have a question? If you sell your asset less than FMV, can he question and make your GSC equal to FMV? There are two places when he can do this. 50C, make it equal to SDV. 50CA, make it equal to FMV. Clear hai? Last. With this, we get done with. Bro, you should have the format in your mind. If I finish that format, I finish the chapter. This is the first thing in the format. But believe me, only GSC, ICAI and exemptions are big. Transfer expense 5 minutes. Net sale consideration 1 minute. Cost of improvement 10 minutes. Other things in the computation will get over very fast. Our focus is three things: GSC, ICAI and exemptions. Last point in special cases of GSC. Section 50D. We are now going to make a big compromise. Something that we have never done before. Something that is illogical. Something that is unacceptable. Something that should not happen is what we are now going to do. A big and massive compromise. By chance, GSC cannot be determined. Bro, we have tried everything possible. Our first step is whatever is the money received should become GSC. We tried, we did not get the answer because money was not received, non-monetary consideration. Bro, still no problem. Barter or exchange still gives me the answer. What is the answer? FMV of the asset received. So we know the answer. But we faced a difficulty, sir. We were not able to value what we have received. See, one thing is for sure that sale consideration is not what you give, sale consideration is what you get. And if it is not possible to determine the value of what you get, you still have to pay tax. We are going to make a big compromise. This is stupid, nonsense, illogical. But believe me, the only logical thing here is that nothing else is possible. And thus we are going to take your GSC as, can you believe this? Fair market value of the asset. Don't you think this is wrong? But nothing else is possible. Please understand. I give you a capital asset. In return, I take from you whatever be the consideration. What I take in return, remember the bottles, is my GSC. GSC is always what you get. GSC can never be what you give. GSC can never be what you give. No, bro. GSC is only what you get. But if it is not possible to value what you get, you are making the biggest possible compromise here. You will take the value of what you have given. Have we ever taken the value of what we have given as GSC? We always take the value of what we have. But if we don't know how to value what we have received, so we will have to take the value of what we have given. This is my last option. Last possible thing. I will come to this only when nothing else is working. If by chance there is any other way possible to determine GSC, I will do that. I never take the value of what I give. I will always take the value of what I get. But if it is not possible, then I will take the value of what I have given. Understood? Shall we go ahead? No. Q? So tell me now, what is your doubt? To not go ahead, मतलब क्या leave the class? So, you understood? क्या हाँ? What did you understand? Why? We have no other way to determine. Why we don't have any other way? Last option. But why it is the last option? That is what I'm asking. Because if I give you my asset, be it gold, land, anything, in return you are giving me bottles. Bottle ka valuation is not difficult. It is possible. You give me AC, you give me projector, you give me fan, laptop, whatever you give me, in whatever quantity. It is possible, no? Then how can this point be triggered? Even if it is the last option, why do we need this point? When or how will there be a situation when it is not possible? No? अभी तो रुक. Now you just see, bro. This requires an example of where it can happen. How could you say कि हाँ हाँ sir understood, चलो let's go ahead. It requires an example. Okay, must example. Must. One of my favorites. Okay, so year 2007. Year 2007. You all were there? Just made it, no? No, substantially there. I was also there. 2007, bro. You all were there, equivalent to not there. Happens to be the first time in my life when I studied tax. मतलब you all are learning now. I was your age when you were born, and same age I was also learning tax for the first time. Coincidentally, 2007 happens to be one of the good years that way. 2007 was Deepika Ji's debut in Bollywood. Deepika Ji's first movie, Om Shanti Om. दीपिका जी, हाँ ये पता है सर. सलमान खान, शाहरुख खान, अमिताभ, दीपिका जी, हाँ हाँ सर, डन, confirm. We know it. We know her. Since the year 2007, I have this one dream. I want to go out on a dinner date with Deepika ji. Hundreds of times I have imagined that date. You know what will happen, the proceeding, one after the other. I have imagined. Every time I think about her, in my mind, आँखों में तेरी अजब सी अदाएं दिल को बना ले. By the way, it coincidentally happens to be a song of that movie only. Multiple times I have thought that I will take her to this place, that place. When the moment the date will begin, then I will switch again. तुमको पाया है तो जैसे खोया हूँ, कहना चाहूँ भी तो तुमसे क्या कहूँ, किसी ज़बान में भी वो लफ्ज़ ही नहीं कि जिनमें तुम हो क्या तुम्हें बता सकूं. Coincidentally again same movie. मैं अगर कहूँ तुम सा हंसी can't. And even after so many years, this statement is so appropriate, bro. Believe me. And chalo, after 2014, somewhere this dream should have stopped. But this just refuses to go down. In fact, ma'am is very well aware of it. She's like, keep dreaming. No, there's nothing in dream. So what? She also dreams about Hrithik Roshan. How does it matter? The dreaming is, there is no cost of dreaming. No. Keep dreaming. Bro, one day I will manifestation. One day I will make it happen and prove it. That if you, same movie mein there was one more thing taught, that if you like something from the bottom of your heart, the whole universe conspires you. अगर किसी चीज को सच्चे दिल से चाहो तो पूरी कायनात. Message in the same. What an actor! What a lovely message. See everything. She has been superstar. She is an inspiration. Some months before her debut, she was background dancer in music videos of a singer called Himesh Reshamya. She used to be a background dancer in music videos. And look where she has come up. And after 2014, after a few years, it was like, and now, we are different, etc. Now, I am married, but now she is also married. Now I am a parent, she is also a parent. In fact, on the dinner date, we can share parenting tips with each other. And I'll be better at it because I have more experience. I don't do anything that only I know. I do nothing for the child, I know that. But I can still pretend to share some parenting tips. Well, if you're not comfortable, no problem. I'll treat your daughter like my own daughter if that's how it works. And multiple times, yes, this dream somewhere does not seem to go away. Which is when suddenly one fine day, I come to know that Deepika ji knows Pratik personally. अरे she ties Rakhi रक्षाबंधन में दीपिका जी meets Pratik. She ties Rakhi on his wrist. So that is how they know each other, that they are known to each other. And the moment I come to know about it, no, I surrender myself at the feet of Pratik. Pratik. Please convince your Rakhi sister Deepika ji to come out on a dinner date with me. Please, 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 please. Please. I'll do whatever you tell me. Please, Pratik. Because his sister listens to everything he says. They share a good bond. So if he will say, she will agree. And my request to Pratik is only this much. Just convince her for one date. Bro, then I have my own charm. Bro, second time I won't need you. In fact, in that date, of course, in date, where you don't say each other, chalo, let's divide. How awkward, bro. No, no. I have invited, I will pay. But then if you counter it with no, sir, independent woman, okay, no problem. Still, I have invited. I will pay. Next time you pay, no, you are independent. Next time you, which means that we leave scope for a next time. You have a lot to learn from me. I get paid only for tax. That is also too less. We'll keep a separate batch for that. But yeah, these are styles. You know when to talk to whom and how to talk to whom. You should know when what to speak. Your interpersonal relation should be good. And bro, in final you come and you want online lectures. You have no human interaction. Bro, you will not know how to talk to people once you have your degree. And then you say that, sir, I am not getting proper job. You know, only the degree cannot help you. You need to have something beyond the degree as well. So I know how to apply my charm. I said, Pratik, please. Pratik is very smart. He has also sold his stuff for so many years. He has also, he knows the market very well. He's like, sir, I will convince my Rakhi sister Deepika ji to come out on a dinner date with you. But I have a condition. I said, what? Before listening to it, it is accepted, but still speak. He said, sir, you have an ancestral property in your native place worth hundreds of crores. I was like, yes, you will have to give that to me. Only on that condition, I will convince my Rakhi sister, Deepika ji, to come out on a date with you. I am in my mind while listening to that offer already. तेरे साथ साथ ऐसा कोई नूर आया. I'm like, Pratik, you don't know how to do business deals. If along with that property you would have asked for a full-time servant, you would have got one. You asked for a property, here are the keys. Sure. Done. चांद तेरी रोशनी का हल्का सा एक साया. अभी कर चल. He does that. He does that. Finally the date materializes. तेरी नजरों ने दिल का किया जो हसर असर ये हुआ. अब इनमें ही डूब के हो जाऊं पर यही है दुआ. हाँ. आंखों में तेरी अजब सी अदाएं. I am sorted, bro. Done. Have I transferred my ancestral property to Pratik? Kya no? Yes, I have. Otherwise, how did the date happen? No longer dream में नहीं. नहीं तो I have handed over the property मतलब. He was just an advance so that he goes and convinces. Once that date took place, I have signed the agreement, given everything. Bro, he is foolish that he did not ask for servant. Otherwise, I would have also gone. But he asked for property. I have given it. Let's be clear. Have I given my property? Yes. Is that a capital asset? Yes. Immovable है तो capital asset. In return, I have taken consideration. It is not a gift. Gift is not a TT. I have taken consideration. Problem is that the consideration cannot be valued in money. Spending few hours with Deepika ji on a dinner date cannot be valued in money. It is priceless. It is priceless. It cannot be measured in money. We don't say, sir, what will be sale consideration of my ancestral property, sir, or restaurant ka bill? Lol. That I will pay. I'm not getting it. Bro, I said, no, I will offer to pay. Sale consideration is what I get. What I got. Deepika, matlab, a date with, that is what I meant. A date with Deepika ji. That cannot be measured in money. And if what you get cannot be measured in money, then the value of what you give is going to be the capital gain ka sale consideration. You understood? If you cannot value what you get, so you will be taking the value of what you gave. शोखियों में डूबी है अदाएं. Hello, understood? We'll keep a separate session. Some people promised piano but never brought it. क्या? Why? You can't walk. What happened to you? Where? Whom were you dreaming of? मेरा तो I openly admitted, disclosed कि हाँ, whom were you dreaming about? No, nothing is going to happen. At that my college time, no, I used to dream about Deepika ji, knowing that it won't happen. Now I dream knowing that it will happen. You have to reach a certain level to dream also. ऐसा station पे while walking, you don't have to dream. So what were you doing? She used to saying, sir, now I am injured, so I will not get piano. As if when she was normal, she was going. So क्या, you quit? So you get it repaired, no, one fine day, or buy a new one. So buy and bring. पागल है. पैसा दो. It's a छोटा छोटा बात you do. That you manage. Ladies and gentlemen, have you all understood with the example? Deepika ji cannot be measured in money. It is priceless, and therefore the value of capital gain is still taxable. The value of what we have given. Is that clear? That is finally your concept of gross sale consideration. Everyone clear? Fantastic. Now you have to be in your mind ready with the pro forma computation of capital gain. After gross sale consideration, the next thing that we have is transfer expense. Correct? Eh? Expenses that are incurred wholly and exclusively in connection with transfer. Wholly and exclusively in connection with transfer. Example, brokerage, registration, commission and brokerage is same. Advertisement, etc. will be considered as transfer expense. See, if you want to sell your property, supposing this classroom, the owner wants to sell, I give you one option. Open the window, stand at the window, and any random person passing by. Hey, property, come na, property, come, property, or do one thing, scream from the window. Property, wala, property, wala, property, wala, property, wala, property, le lo re. Stand at the window. This is how you sell your stuff. And this is how we will sell our property. We will appoint a broker. So to do the sale, we will have to pay brokerage. Housing society takes charges from the outgoing and the incoming member. If you don't pay the charges, society will not transfer. Compulsory expense. Sometimes we will give paper advertisement. Anybody wants to buy property, come and buy. You understand? All these expenses are necessary, without which transfer will not take place. Basic principle of income tax: expense incurred for earning income will be allowed as a deduction. So transfer expense like brokerage, etc., which result in your sale will be allowed. However, vague expenses, vague, ambiguous, you heard the term in Contract Act. Vague, ambiguous, irrelevant expenses will not be allowed. Nonsense expenses will not be allowed. Nonsense. Sir, you understood the first point. Sir, what is the second point? Supposingly, I have transferred my property, my ancestral property, with a very, very heavy heart. My ancestral property has emotional value. No, I was blinded by Deepika ji. But end of the day, I have ended up transferring my ancestral property for one date, thinking that it will repeat. But when the date did not repeat, I realized, my God, what have I done? I have ended up transferring my family property only for the sake of one dinner date. That made my heart heavy. So heavy, so heavy, so heavy, I suffered cardiac arrest. Then I underwent bypass surgery. So I paid hospital. The expense of bypass surgery is transfer expense. Bamboo. There has to be some effect of your expense which results in the transfer. An expense which ensures that your transfer takes place is going to be allowed. You can't be claiming any nonsense expense. Any nonsense expense. Do you understand? Only an expense which has given effect to your transfer. Vague expenses not allowed. As funny as it may sound, what if I tell you that there was a lawyer, one of the top most lawyers of the country, passed away recently. I think he passed away, I'm not sure. A gentleman called Shanti Bhushan, lawyer, father of Prashant Bhushan. In fact, Prashant Bhushan, Yogendra Yadav, and Arvind Kejriwal are the three people who are founders of the Aam Aadmi Party. So Shanti Bhushan was father of Prashant Bhushan and one of the topmost lawyers of the country. He falls in the same category as Ram Jethmalani, Kapil Sibal, Arun Jaitley, Abhishek Manu Singhvi, Subramaniam Swamy, Harish Salve. These are the country's topmost lawyers. They charge lakhs and crores of rupees for one sitting, one hearing. Shanti Bhushan, sir, a lawyer by profession, underwent heart surgery at AIIMS, Delhi, and claimed that as PGDB deduction. Expense on heart surgery of lawyer claimed as deduction in the business income. Law profession, no. PGDB. AO asked, how? He's like, sir, this is repair of plant and machinery. My heart is my plant and machinery. See, only if I keep my heart in good condition, I can go and argue properly in court. Any person who is in the profession of continuous talking, after a point has cardiac issues. So I have to keep my heart healthy, with which I can go and argue better in the court. Sometimes I have to talk in a loud volume, sometimes soft, so that with this voice modulation, the audience understands what I'm talking. Just imagine somebody teaching you direct tax like this, that we are now doing transfer expenses. The 2 points are over. Now let us go to the next concept, net sale consideration. See, you have already computed GST and you know transfer expenses. So the difference will be NSC, nothing other than this to be studied. Now we can go to our next concept, that is cost of. No, that's not how I talk. I have to awaken the sleeping generation. For that, I have to keep my heart in good condition. Therefore, repair of plant and machinery. And dear AO, if you think that it is of many years usage, then you can give me depreciation, capital expenditure on the heart surgery. He took this as deduction, and when the AO disallowed, can you believe he fought this case in Delhi High Court? Of course, he did not have lawyer expenses. How? He had to go to the court every day. One hearing. So easy. The judge called him here. Plant and machinery. What is the original cost? What is the WDV of this block? How many assets in the block? Huh? Depreciation. Heart surgery expense. You want bamboo? And listen, if you say that it is keeping your heart healthy for your law profession, tell me one thing. Did you get some personal benefit? Just say yes or no. Heart surgery. Some personal benefit? Expense has to be only and exclusively for business. This was a PGBP case law. This was a PGBP case law, Shanti Bhushan. Heart surgery expense of lawyer will be disallowed. But I had to tell you because you found it funny when I said heart surgery ka deduction. You found it funny. No bro, people claim to give or no, officer will decide. If the officer is satisfied that your case is genuine, satisfied that your case is genuine, he will probably grant you the deduction. And if you genuinely feel it is allowed expense, fight a case. Let the court decide. And who will fight in the court? Who knows taxation? We. Litigation tax practice will give you much more remuneration than compliance. For return filing, now there are softwares which are filing returns at 99 rupees, and you will never be able to match them at their pricing. Of course, their quality is horrible. Then people will get notices. Then replies have to be drafted. At that time, people will give. How important you are for someone will decide how much that person will pay you. Do something that no one else can do and then see how much people pay you. So one thing is for sure, that if you go in litigation practice where you are going and winning case for people, that also starting will be very difficult. You just fight one case and from an impossible looking situation, try winning that case and make your fees 10 times from the next case. First case, maybe you'll have to suffer a loss. Maybe there will be more out of pocket expenses. But then see. There was this Bollywood movie called Oh My God, where this person is filing a case against a temple trust. No one is ready to accept the case. No lawyer is taking his case. But finally, in that movie, they show this guy, Advocate Hanif Qureshi, who is taking his case. Once other people come to know that Advocate Hanif Qureshi is fighting the case, one by one, everyone is searching for Advocate Hanif Qureshi and going over there. And finally, he had hundreds of clients. You have to create that name for yourself. There will be people who will claim these expenses and actually take deduction. But difficult will be to prove it in the court. End of the day, the point is, court has to check what? Does heart surgery expense give effect to your transfer? Is your transfer happening only because of that? Bro, heart surgery is happening because of your transfer. Transfer is not happening because of heart surgery. Such expenses are not going to be allowed. ये clear है, bro? Everyone, 100% absolutely clear. Fantastic. Let's go ahead. हाँ.
कभी-कभी negotiations के लिए आप लोग रेस्टोरेंट में बुक करते हैं, so इसका expenses
बुक नहीं करते, we go and have. Bro, you know the statement that you said has how many meanings? We go and have a meeting at a restaurant. Bro, Ritesh Agarwal fan? Do you even know who is Ritesh Agarwal? Good, you don't. Maybe you're pretending that you don't. Duryodhan burst into laughter the moment I took Ritesh Agarwal ka name. He thinks that I did not observe because he knows who is Ritesh Agarwal. कौन है दुर्योधन? अरे बोल ना. You don't know? Founder of Oyo? Bro, we go to a restaurant to do the deal. So we don't. Our focus is not food over there. कि ऐसा नहीं है कि you have ordered for 50,000 का food or 1 lakh का food. Main purpose was that maximum we will order 1 tea coffee or 1 plate idli vada. By chance your sale materializes over there, keep that bill and take that deduction. It is an immaterial amount that the AO will also waste too much of time. It is an immaterial amount that you will actually keep the bill of that 100 rupees ka restaurant to take with cash so that I am going to get deduction of 100 rupees. You will pay in cash and forget also. But then broker is going to be paid 1%. That's a big amount. We want deduction. You understand? Having said that, if you are having the bill and you take the deduction, you will get the deduction. Because don't forget, your deal took place over in the restaurant while eating. Bro, कैसे बच्चे. हाँ. Next concept in the computation. Net sale consideration. See, you've computed GSC. You've computed transfer expense. Do you have brains? Preserve them. Preserve them for later. See, whenever something is less in supply, don't waste it unnecessarily. Save for later. Because here you don't need brain. You need calculator. Net sale consideration is GSC minus. You realize GSC took almost the entire lecture, and after that, 2 things are over. We in fact go to, now that NSC is over, what is the next thing? Kawa, which can also be ICAI. See, we are aware that index cost of acquisition is removed for future students. First of all, for you, this is not removed because you have to do the calculation of ICAI till 22 July. Excuse me. Secondly, future students also, believe me, every batch I will have to teach indexation unless and until they remove that option to pay tax. You know, so much khichdi auntie has made, no? Okay, now if she removes or does all that, there will be a big blame on the government. Okay, you're doing this, that. Aunties like to hell with you guys. I'll bring new income tax law. In that, I will keep all the benefits the way I want. Now, normally, if you bring amendment, then people can protest. Why are you removing this or that? We are bringing new income tax law. This new income tax law will be applicable for which attempt is a question mark, but certainly applicable for your final part. Because by that time it will be passed. Which makes one thing very, very clear, sir. Yes, sir. Everything that you are learning in income tax right now. You know, I was always wondering, okay, now all the students will come in CA final. I do PGBP, capital gain, everything. Now capital gain ke andar, if I again say, I shall see how boring it will be for you. Anything is exciting only when, you know, first time it is humorous, first time, just imagine. And your reaction will be, 3 years ago you were saying I manifest, now also you manifest. So the law only will change. I will create new examples. But Deepika ji will be a part of that. That's the only constant. So future का students का indexation, at least for now, for resident individual HUF, for immovable property tax calculation, not income calculation, we still need to do. So indexation is not eliminated altogether. Compulsory acquisition, conversion of stock in trade is postponement of tax. Tax we are paying today, but transfer took place earlier year. Again we have to do indexation. So we have indexation for all purposes. And you also in any case have till 22. Correct? Eh? So just like in sale consideration, what we will do? First we will write normal meaning. Normal meaning of kawa, normal meaning of I kawa. When we are doing this, we are doing favor on the notebook. Remember the beginning of today's lecture? Finally, we will go to special cases of gross sale consideration, which is the point on which question will come. Those cases where kawa. Kya kuch bhi you are saying? Special cases of sir, anything I am saying, you are saying yes only. Special cases of cost of acquisition, those cases where your cost of acquisition is not going to be easily, readily available, you will have to put a little effort to get this. Just like we did in GSE. So now it is not new to you. Normal meaning, special calculations. Let's go and learn first the normal meaning. Normal meaning of both concepts. What are the two concepts? First, kawa and then I kawa. What is cost? Of course, we are interested in capital assets, but forget capital assets. In general, you have not been a seller for anything building, but you have certainly been a buyer for anything that you have purchased. This time you have to speak from buyer point of view. What do you mean by cost? By the way, let me remind you, you have completed a subject called costing. In case you have forgotten. Forget the concepts. It is likely that you have forgotten that there is a subject called costing which is over. What is the cost of anything? Amount paid. To do what? हाँ, ऐसा बोलो ना. That the amount that is incurred to acquire ownership of an asset. That's the purchase price. That's correct, but incomplete. Carry on. Including all expenses before using the asset for the first time. Is what you have been taught in accounts. It's the same thing tax also follows. Say you buy property of 5 lakh. You paid stamp duty value of 30,000. You paid registration of 30,000. The other charges of 40,000. The cost of acquisition will be 6 lakh. All expenses paid will be added. You've done that, no? Computer 25,000, installation 1,000, so you capitalize 26,000. In fact, after studying borrowing costs, you also know that interest before putting the asset to use is also going to be, and I have discussed this in PGDB chapter. So all expenses before using the asset for the first time will be capitalized. That is added to the cost of the asset. ये correct है? Hello. And what about ICAI? Bro, see, COA into CII of transfer year divided by CII of acquisition year by assessee. CII of the year in which the assessee acquired the asset. Correct है everyone? Cost of acquisition into cost inflation index of transfer year divided by cost inflation index of the year of acquisition. Everyone is clear? We have written the normal meanings of bro cost of acquisition and index cost, kawa and I kawa. But we realize one thing, that this is a normal question, and capital gain will never be a normal question. There will be abnormal adjustments. For example, you will be asked special cases of COA, those cases, those places, those situations where cost of acquisition will not be easily, readily available. Just like GSC, you have to put some effort. Here also you will have to put some effort and determine your cost of acquisition. I will have to change the order. Actually, the first one which I do is the biggest and the most important. If I start that now, it will split to the next class, which is not appropriate. In exam life and real life, this happens to be the most important concept of cost of acquisition. Exam life as well as real life. Whether you do see or you don't do see, this is going to affect everyone. I can't split it into two lectures. Thank you, sir. There are totally 16, 17 cases in Kawa. So if we skip the first, we can go to the second. See, ultimately all 79 only have to do. And there is no order. I just start with the biggest first. There is no order. And secondly, you are going to learn all from except her, everyone else. You are going to learn from me only, no? So whatever order I do is irrelevant for you. So I am telling you there is order. Otherwise, I could have done it anyway. So yes, if you compare with any other batch ka notes, the first point will be something else. But for you guys, that will be the first point of the next class. So next lecture, either you come on time or you come after 45 minutes. There is no in between. Huh? Hey, see, morning lecture we feel so fresh, energetic, etc. I feel we should keep this slot only every day. And you please understand one very, very important thing, which your laziness is not allowing you to understand, that when by chance you get free at about 12 o'clock in the morning itself, for the whole world, when the day starts, your coaching part of the day is over. None of you are going to college. Come on, don't think that I'll stay in the same city. When the day starts for the rest of the world, your time is for revision and self study. हाँ तो दूसरा लेक्चर भी लेगा तो that will get over at 4 o'clock instead of 8 or 9 o'clock. You start early, no? You will realize you have more time despite it remaining 24 hours. Anyone who starts the day early now is always left with more time than others, despite everyone having the same. Okay, your laziness is not going to allow you to do this, but believe me, no matter how much natak you do now at intermediate, so, CA final ka lecture starts at 7 o'clock sharp. And this habit of yours will make you take recorded and online and other at CA final. And one thing people by now should understand, that what the teacher can do by being present in front of you, his video cannot. I say this despite being the highest seller of my subject. North India in Hindi and South India in English. I say this. And basically, if I say that live lectures are better than recorded lectures, have by the way somehow endangering my own sales. Think about it. If I have to think only about the financial part, I sell video lecture, full money will come. You come and sit in the classroom, a big portion has to be paid to the class. Big portion. But I still want you to come to the live online full comes from you. Live online में why will class owner get any share? But I still want you to come to the classroom. Let the class owner get the share because you have to think about yourself. Finally, your laziness will decide whatever you have to. Okay. So अपना lecture का timing is going to be 7 to 10 only. And now that we are done with PGBP and almost at cost of acquisition, because after cost we have only COVI and exemptions. Capital gain over मतलब 80% syllabus is over. Now you can take your decision of pre-booking CFI. Existing fees का 50% का offer I gave you if you remember. भूल गया? ठीक है. Summer like के सर छोड़ो ना. Some people in the class are waiting for you to complete your inter syllabus and then you are going to disappear. They will make you disappear. तुम तो वेट ही कर रहे हो ना कि माय सिलेबस गेट्स ओवर देन यू कॉल फॉर सम गुंडास so sir we know that this is being planned behind your back in the class so we know that pre-booking right now does not make sense we never know you may be there you may not be there if you are there at that time we will pay full and ticket है ना गायब है you don't do it no directly show it let's make your base strong today itself. Special cases of COMF, first point we are not doing right now. We will go to the second point. And believe me, you will call goons or gundas later if you today don't give me answer to this question. I am going to wait. You just wait. I am not going to leave you. You are gone. Gone. If you don't answer this question. There are certain assets where cost of acquisition will not be easily available. We have to put some effort. Correct? Cost of acquisition of depreciable assets. And how do you define that? The WDV of the bro, I almost ordered chili powder, bamboo, लकड़ी या काठी या ऐसा कोई स्टिक है स्टिक लकड़ी करके कुछ कुछ ऐसे मारने के लिए कुछ है कुछ देखो ना कुछ रहेगा तो बोलने क्योंकि मैं मेरा बॉटल यूज करूंगा तो एक ही है घर पे वापस बोला है कि लेके आना सबको हाँ हाँ ठीक है इन्होंने आंसर दे दिया believe me if you wouldn't have answered thank you if you wouldn't have answered no I would have seriously dropped all of your one by one WDV of the block. You cannot take chances with PGBP capital gain, and this concept is combo of PGBP capital gain. WDV is the correct answer, but of course before sale, because after sale it is becoming negative. That is why we have capital gains. Opening plus purchases. Always short term, never long term. Now you know the logic of that also. See, that time I told you no, always short term, never long term. You had no idea about the logic. I just said that a block can have one 10-year-old asset, one 10-day-old asset. We don't know the identity, therefore always short term. Not true. The real logic I will tell you now. And now this is an open challenge. Talk to any student outside this classroom pursuing chartered accountancy. Any student you know. And challenge if they know the reason of this. You all are the only people who know the reason, who will know the reason why block will be always short term, never long term. Three incomes I am discussing. Business profession income, short-term capital gain, and long-term capital gain. Out of them, which one is taxable at a special rate? Long-term. See, short-term has special only if it is stock market. Otherwise, short-term is taxable at normal. And business, normal. Correct? That means, do you agree business tax rate, short-term capital tax rate is the same. That is normal rate. Special rate is prescribed only for long-term, 20 or 12.5. This has the hidden logic. Buying or selling of these assets is done as a part of business activity. Acquisition of depreciable asset, sale of depreciable asset was done as a part of my business. So whatever profit or loss I have in the block actually is a business activity profit or loss. But if I put that profit or loss in PGBP, it will show incorrect picture of PGBP because I don't sell assets daily in the business. Because it is abnormal profit, classification wise we have put it under capital gain. So that business profit looks like normal profit, special profit goes under capital gains. While for classification we want to show it under capital gain so that we are not distorting the figure of business, the day-to-day business. The tax rate has to be same as business. If we call it long-term capital gain, the tax rate will change. But if we deem it to be, force it to be short-term capital gain, then classification under capital gain, but tax rate of business only will apply. Business is normal, short-term is normal. So that normal rate of business will only apply, only it will be classified under. And we won't let it become long-term, because if it becomes long-term, it will become special rate, which is not to be applied. Are you understood? Everyone is the logic. Nothing is bigger than logic. Law nahi logic. Law nahi logic. Is that clear? Everyone? Fantastic. Cost of acquisition of depreciable assets. Now we also know the deeming fiction of why it is always short-term capital gain. Fantastic. I'm not doing the first point now as you are aware. Next. Cost of acquisition of something called self-generated assets. So first of all, what is self-generated asset? Let me give you the example. Example, brand. Example, goodwill. What is cost of acquisition of brand or goodwill which is self-generated? Let's be clear. Sometimes it is possible that I am purchasing your business and I am purchasing goodwill from you. Then am I paying some actual amount to purchase it? Then it is actual cost. But then please understand, it is not self-generated, it is purchased. We are talking about self-generated asset. What is the cost? First of all, understand what kind of asset I am talking about. Okay. Supposingly, I want to, you become a CA. After becoming a CA, you want to start a pan shop. Pan, you understand? You have started. You have started. You have started a pan shop. In case CA does not work, this will definitely work. If you look around, there are plenty of customers here. And you name your shop Google Pan Shop with a tagline: your search for the best pan ends. But do you realize you can't use the name Google like that? You will have to take permission. So you call him, hey Sundar. Which Sundar? Huh. Not that Ahmedabad one. See, Sundar Pichai. Sundar Pichai. Hey Sundar, I want your brand Google. Bol, how much? Sundar is like, $2 billion. Yeah, $2 billion. Okay, done, ready. Take your money. Chalo, take your money, get lost. Now, can I say Google has sold its brand to you? Selling price is $2 billion, the amount that you have paid. What is cost? If Google has purchased that brand, then the actual cost. But what if Google has not purchased? What if Google has not purchased? Google has not become Google overnight. Google has done 2 decades of hard work. Google is just a search engine. The correct term should be, let us search the internet. We don't say that. We say let's Google. Google has become synonymous with internet search. Yahoo has search engine. MSN has search engine. No one talks about that because Google gives correct answers. If you are on page number 2 of Google, are you even on Google? No one goes to page 2. People see page 1, that also first 4 links. It has become such a big brand. Believe me, we get calls from Google representatives stating that, sir, you give us 10 keywords. CA final direct tax, CA indirect tax, best CA coaching. best mentorship in CA, test series in CA, direct tax faculty, India's best direct tax. You give us those key terms that a student may search, and we will show your link first. You can give your competitors' names. Say your student is typing competitor name, we will suggest your. They have packages, 5 lakh package, 10 lakh package, 15 lakh package. You think I have 10 lakh rupees to give them? The statement you have not understood. You think I have 10 lakh rupees is not the question. I have. For giving them, I don't. But last I know, some of my competitors, believe me, have done that. You will search my name no, on YouTube, on Google. Continuous video will be video suggestions, link suggestions will be of that. Crazy amount. Matlab, I am a keyword in my competitor's search. How insecure can one get? And by the way, let's not forget we are teachers. If I am good, people will take admission with me. If you are good, people will take admission with you. What is this game of branding and valuation? What is this game that whoever you search, I will be the suggestion? But then, Google is the Google and people are ready to pay. Give name of your competitors as keywords. That's 2 decades of hard work. Which is why Google commands that $2 billion. And now what will we take as cost price? Selling price is $2 billion. What is cost of Google? Bolo. What is cost of Google? Because we are doing cost of acquisition, bro. Selling price is how whatever Sundar charged is what he received. Cost is what? Selling price is actual, no? So not a special case. Cost is special. Therefore, we are learning here. Yes, please. Take a wild guess. It is correct.
What we receive.
What you receive? What he pays whom? Who is paying to Google? So, Pagal, that means you have not understood the question only. Google is the seller. So, he who? We are talking only about Google. Who he? So, that is Google only. Google is selling, no? The brand. So, what you are getting is selling price. Cost is what? Kya? Cost is over and above? How? Explain.
Additional value.
Which additional value?
2 crore. 2 crore दिया तो brand बनाया उसका भी वो charge.
This 2 crore is paid for $2 billion is paid for the brand. There is nothing over and above here. And I am asking cost. Again, you are thinking only selling price. I don't know why. Google has sold its brand. For that, it is getting a total value of $2 billion. Please understand that is selling price. Why are you confusing it with cost? My question is, what is cost? Bro, only thing was you were getting confused in the transaction. You were thinking that selling price is cost. No, selling price is what we get. What have we paid? If it is purchase, so let me make it clear. If purchase goodwill, so we will take actual. In case it is purchased. But in case of self-generated, the name itself indicates there is no cost. Google has done 20 years of hard work, but we don't measure that in rupees. Self-generated asset. You understood or no? So if purchased, then actual cost. Otherwise, self-generated, then nil. Is that clear? And one clarification, that if it is goodwill of profession, like sale of a CA form, that is not taxable. Means seller can sell a business or profession, will get money for both goodwills. That is his sale consideration. Cost of acquisition, if you had purchased, then actual cost, and if it is self-generated, then zero. But there will be some profit in both. In profession, it won't be taxable. Only in business, it will be taxable. That means if a business is being sold, then there will be tax on sale of goodwill. But if a profession is being sold, there won't be tax on goodwill. Why? There is some small logic here. You know, you may agree or disagree, but this is the law. Even if you don't like the logic. In a business, if somebody is selling, no, income tax law assumes that he will get buyers. I want to sell McDonald's. I want to sell Domino's. There will be a buyer because the buyer knows that customer is not coming for a company. Customer is coming for the burger or the pizza, which will remain same even if the owner changes. In business, the value is in the product. If owner changes, the manufacturing is same. So even if the owner changes, customers will come. Therefore, there is probability of sale. In profession, the owner is the value. It is human services. Supposingly today a coaching class gets sold. The new person owns that name. You won't go to that class. You won't go to that class. You are not going for the name of the class. You are going either for the teachers or for the owner whose management and administration you have trust on. If the owner and the teachers are changing, what will you do with the name of the class? Chaatega. What will you do with the name? If a coaching class gets sold, ownership changes, teacher change. The probability of student withdrawing becomes high. The owner will actually have to come on public record and say that don't worry, I am selling the brand, but I will continue the management. Because students have trusted the management skills of the owner. He will have to come on a public stage and say, yes, the brand is sold, but I continue to be the chairman. Because everyone knows that if the owner changes, the trust may not be same. Profession में sellability is very little, so they say not taxable. But business में people are interested in the quality of pizza or burger, which remains same. So in business, there will be sale. There will be capital gain. If it is purchased, then actual cost and sale generated, then zero. Correct? That confusion of selling price, cost price is clear. Everyone. So these are the first 2 points. So of course, they would have been point number 2 and 3. But okay, my first point will become my third point, which I am going to start first thing tomorrow in tomorrow's lecture.